Shares in the streaming giant shoot up in late trading thanks to better new subscriber data after nearly a year of disappointing results. Plus, Wall Street continues its rally amid upbeat corporate results as European earnings kick it up a gear.
So, Tom, let's take a look at the futures. For the moment, we're holding to some of the gains. The FTSE, of course, gaining some 0.2%. Similar gains for the DAX futures, but we have to really look at what's happening in treasuries, dollar, and then that inflation impacting sterling.
Yeah, absolutely. The sentiment has slightly turned. We came in this morning, it was looking pretty bullish on the back of a very strong session, another strong session stateside, the earnings picture coming through. But now when you take into account that CPI print from UK and, of course, the expectations that the Bank of England may need to go 1% come November the 3rd, the sentiment is starting to come off a little bit, despite, again, the fact that we do have some earnings coming through on the European side that are looking pretty positive. The likes of Nestle, ASML, for example. The story around Credit Suisse continues as well. FTSE 100 currently gaining 0.3%. The Spanish IBEX up 12 points at 7,633, just a gain now of 0.2% over in Spain. Let's switch it over and see how things are playing out cross-asset then, see if we can build on the gains of yesterday for Wall Street. Futures pointing to further upside of 0.2%. Whether that will moderate, given what's happening in the dollar and the bonds as well across the US curve, is something to watch through the session. The pound at 112, that's down on the back of the news around CPI. We'll see how things play out on gilts. We'll check those shortly. The 10-year currently stateside 4.06. That's a move higher in yields of close to 6 basis points. You're seeing a bit of a sell-off across the curve stateside. Brent currently trading at $90 per barrel. That's a gain of 0.4%, despite confirmation that the Biden administration will be releasing more of those strategic reserves onto the markets. Let's check gilts then on the back of this news. And you are seeing a sell-off across the curve. Yields up, price down, 362 on the 2-year. That's a move higher by 6 basis points. The 10-year just above 4% now, a move higher by close to 8 basis points. The 30-year, important of course for all of us, 437 on the 30-year. That's a move higher by 7 basis points. Again, CPI coming in 10.1%, the highest level in 4 decades. Francine, a challenge for the Bank of England.
Yeah, and I know investors keep on saying, is Liz Truss at this point safe or not? Unclear. We understand that there's also rebellion from backbenchers because the Chancellor yesterday refused once again to say that they would stick to that pledge of keeping pensions in line with inflation. The other, of course, talk that Tom wants to talk about is the talk of the town, is that they also have ruled out increasing taxes for energy and banks. The picture across the board, so look out for energy, look out for banks, of course, because of extra taxation here in the UK. That is not confirmed at all, but certainly a possibility. Insurance, energy, auto parts on the way up, gaining around 0.8 to 0.9%. And then on the downside, we have retail and construction material and consumer goods down some 0.2%, Tom.
Okay, let's get more of a pulse on these markets then. Bloomberg M Live Managing Editor Mark Cudmore. Mark, you are looking, as many of us are, at the UK.
Yes, Tom, it's hard to look anywhere else at the moment. It is the most exciting macro story and certainly a very interesting. We got that data print, as you mentioned this morning, another hot inflation print. But later on today, we get Prime Minister's questions after a pretty turbulent week for Liz Truss. Now, this is a Prime Minister whose election manifesto is based on the idea of growing the UK out of its problems, a real growth-focused kind of story. Well, how's that working out? This is 2023 GDP forecast for the UK, consensus forecast. At the start of the year, they were back at 2%. Now, let's not all blame it on Liz Truss. They've been downgraded all year. This yellow line was the day that Liz Truss declared that she was going to be running for Prime Minister, 2 days before the vote started. That was the 10th of July. We still had growth forecasts for next year at 1% at that time. Then, during the leadership protest, things kind of accelerated. They really accelerated in mid-August when it was clear in the results that Sunak was not going to win. It was going to be Liz Truss as Prime Minister. And markets really downgraded, or economists really downgraded their forecast yet again. This is the date that Liz Truss actually took power. And now, that was at 0% for next year. Now we're expecting minus 0.4% for next year. You can see which way the trend is. Economists tend to chase the story. There are many downside risks to this number given what's happened over the past week. I'm interested to see how Liz Truss is going to explain this today in Prime Minister's Questions. It's going to be a tough session.
I know we'll all be glued to our screen. Our managing editor there for MLive, Mark Cudmore, of course, talking about Prime Minister Questions, the first that Liz Truss will do since appointing a new chancellor. So let's keep it on the UK. Inflation jumping more than expected to a 40-year high of 10.1%. It comes as the embattled Prime Minister is due in Parliament, where she's hoping to regain authority amid the fallout from her government's mini-budget U-turn. Now let's bring in Bloomberg's Lizzie Burden. Lizzie, I mean, this is not a U-turn. This is a complete reversal. I mean, it's more than a U-turn from what we were promised and actually what we're getting, which looks like austerity 2.0. Where does this inflation print leave the BOE?
Well, we're back in double digits. It's a 40-year high, back where we were in July. The debate for the Bank of England at its November meeting was really between 75 basis points and 100 basis points. Investors had pared back their expectations when Kwasi Kwarteng was replaced with Jeremy Hunt as the Chancellor. But given the significance of this print, perhaps it'll tempt some members of the Monetary Policy Committee to go for that 100 basis point hike. The other thing, of course, that we've learned from the Bank of England is that they are going to crack on with quantitative tightening after the Halloween budget, just not at the long end of the curve. And it's a confident message from the Bank of England. They're saying we are going to reprioritise inflation fighting. We're not going to be a permanent backstop for the government, but we have got a firm eye on financial stability. Hence this compromise, because of course it's at the long end of the curve where you saw all that turmoil in response to Kwasi Kwarteng's budget. So a confident foot forward from Andrew Bailey.
And Lizzie, meanwhile, the Financial Times reporting that possibly the Chancellor considering extending windfall tax. It could hit the banks, it could hit some of the energy companies. In fact, banks moving lower on the back of this news. Of course, it's an attempt to fill that £40 billion fiscal hole. Talk to us about the significance.
Yeah, definitely keep an eye on HSBC, Barclays, Shell, BP this morning. The reason that he's got to do it, as you say, is he's got to plug this £40 billion hole in the public finances. Even though he's taken a wrecking ball to Trussonomics, he's still got to find more savings. But this is on top of the fact that they're going to raise corporation tax. So as Jeremy Hunt put it himself, he's got to take eye-wateringly difficult decisions. This is one of them. But at the other end of the spectrum, he's going to ask all government departments to shave 15% off their budgets, except defence and health. So the opposition Labour leader Keir Starmer has dubbed it austerity 2.0. Even pensions aren't protected. He's refusing to guarantee the triple lock on pensions, which of course says that they will rise with the highest of earnings inflation, or 2.5%. Pensioners, a really key constituency for the Tory party. And this is what you can expect Starmer to focus on at Prime Minister's Questions with Liz Truss later today.
Yeah, a couple of Tory MPs coming out publicly saying they would not vote for a change to that triple lock. As you say, Lizzie Burden, thank you for the latest on all things UK. Join us now is Ven Ram from our Markets Live team and Head of Investment Strategy at JP Morgan Private Bank, Grace Peters. Grace, let's start with you and your views on how you're assessing UK assets as we look at what's been described by some as austerity 2.0 on one side, but also a Chancellor who has managed, around the edges at least, to restore some of that credibility.
Absolutely. I mean, look, when you're thinking about the UK, you've got to think about it in an absolute and a relative context. And even before we got the mini-budget, the UK was looking pretty unattractive in a relative context because of the lack of energy independence, the already high inflation, as I say, absolute and relative to Europe, and indeed the US. And I think this extra risk premium just, sort of cements the view that the UK is going to remain very volatile and there are better opportunities elsewhere. when I look across asset classes, sterling to me still has downside risk here. You know, yes, we've had the U-turn. We've still got that 40 billion hole that you mentioned. The risk premium, I think, is going to remain, particularly ahead of the OBR's report on the 31st of October. But sterling's pretty much back to where it was before the mini budget. So actually, whilst the risk premium's been retained in the gilt market, to me, sterling feels, you know, a little bit vulnerable in light of all the recent data points.
Grace, are we underestimating? Is the market underestimating how much pain this country, you know, the UK will have to go through to actually get inflation under control?
Yes, I mean, inflation now is outsized. The cost of living squeeze is very meaningful. We think the real step down in growth in the UK is happening now, and at the time where, you know, the Bank of England is making some tough choices, and as your reporter there said, you know, pressing ahead with QT as well. So I think the outlook for the UK is very, very difficult, and certainly when we're focusing on our asset allocation, it is predominantly in the US, you know, where we have much higher conviction in certainty of outcome.
Okay, Venram, let's bring you in at this point then. Your assessment, given the CPI print, 10.1% here in the UK, where that leaves the Bank of England, and how much is being done in terms of the cost of living squeeze to reduce that demand, that pressure versus, of course, having to acknowledge that maybe that energy support is going to be less potent than we'd thought. Where does that leave the BOE as we look ahead to November the 3rd?
Morning, Tom. I think that the markets are pricing in about 96 basis points of a rate increase come November 3rd, and I think the Bank of England would do well to take it, and I do think that they will take it because they've already been hawkish in the past few days, and Bank of England Governor Andrew Bailey has said that they won't hesitate to raise rates as needed. And within the inflation print that we got this morning, and you need to keep in mind that retail price inflation, which is the measure of inflation for pension funds, that is already north of 12%. So the BOE doesn't really have time on its hands. It needs to raise rates sooner, and the sooner the better, because we are hardly given an inflation print of 12% plus on RPI, as I was saying. The interest rates in the UK, benchmark interest rates in the UK, are hardly in neutral territory yet. And therefore, the Bank of England needs to make most of the available time before the economy starts showing the pressures, cracking under the pressures. And therefore, the Bank of England will raise rates by 100 basis points, I think, on November 3rd.
Ven, how much, so first of all, they're pretty decisive on going ahead with this QT a couple of days before that November meeting. How much will that actually change financial conditions? How much effectively is it tightening the economy?
Well, at the pace they are going, I don't think it's going to be too much of a bother for the markets. I think that, you know, previous estimates have been that the cumulative increases for the entire year, for 4 quarters, will be roughly equivalent to about one hike of 25 basis points. So I don't think that the markets are going to sweat that too much. And as we know, the Bank of England is going to be focusing on the front end rather than the back end, where we have seen all the stress. And the front end has had a miserable year so far, and I expect that to continue as the Bank of England continues to raise rates.
Grace, I want to bring you in on the specificity of the Financial Times reporting around banks and energy. It seems to be something that the Chancellor is weighing up in terms of a windfall tax, or however you want to characterise it. But ironically, the FTSE 100 has been something of a safe haven year to date because of those big names and their exposure globally. Do you reassess? Would you want to reduce your exposure to those sectors, or do you think this is an opportunity to buy when you see the likes of Lloyd's, for example, down 3.5%, along with NatWest down 2.5% today?
So I actually think there's two different stories there. You've got the UK domestics, which obviously the banks are in that camp, and then you've got the exporters, of which I'd put the energy companies in that camp. And actually, exporters have done pretty well so far this year on the energy side because of the higher commodity prices, but also because weak sterling means, you know, is positive for the export sectors. For the UK banks, then I think it's too early to buy here. You know, you're seeing a pickup in provisions. I think that's only going to continue, loan losses, etc., as you go through the next 6 months. Valuations, yes, are cheap on a headline basis, but I think you're still seeing significant downgrades to earnings ahead of you. And then this is an early cycle sector, the financial sector. We still think that you're very much late in the business cycle. You need to get through the point that the recession is broadly acknowledged, broadly priced, and then you look to the early cycle sectors. So banks too early. I'd be more favourable on the energy companies because I do think that there's a longer term structural story around the oil price, and these businesses have done a very good job over the last 10 years at bringing down the oil price at which they can pay dividends, and there is a good shareholder return story there.
Grace, thanks so much. Grace Peters stays with us, and thank you to Ven Ram from our Markets Live team on all things, of course, gilts and BOE. Coming up, Netflix returns to growth as Hollywood breathes a sigh of relief that the worst may be over for the streaming giant. More on that in a moment. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. 16 minutes into the European trading day. You are flat across the European benchmark. Futures in the US still pointing up. The S&P E-mini is up by 0.2%. And just briefly checking in on your gilts. Yes, yields are up on the front end by 7 basis points. The 10-year also up by 7 basis points. But you're flat now on the 30 at 4.29. It's the earnings picture as well we continue to look at, Francine.
Yeah, maybe there's just a belief or an underlying longing for going back to inflation fighting instead of the market chaos, and maybe that's the interpretation of a lot of gilt traders. Now, Netflix shares have jumped in extended U.S. trading after the streaming giant stemmed its subscriber losses in the third quarter. Hit shows like season 4 of Stranger Things helped it add 2.4 million members, beating expectations. Now, let's get more from Bloomberg's Berlin-based tech reporter Aggie Cantrell. Aggie, no spoilers, because there are a lot of the series I have not seen yet, but is the worst over for Netflix?
So what's essentially important to see from those original numbers is that those subscriber numbers, those 2.4 million, isn't only what they're looking at, but also they're projecting another 4.5 million over the Q4 period, which of course includes the holiday period, a period where a lot of people are potentially spending a lot more time at home and watching a lot more TV. And so that's so they see this as an upward trend for them after 2 quarters of really lackluster subscriptions. subscriptions for the company. But what's also interesting is that they're moving away from a purely focusing on the subscriptions themselves, and also looking at how the company is making revenue going forward. So essentially, when talking to investors going forward, they're not going to be pointing to the subscription number alone, but instead going to be looking at how the company is growing in terms of revenue growth.
Yeah, and interesting as well around the advertising model. I think it's $7 a month if you opt for some advertising. What about the dollar dilemma for Netflix, Aggie, and how the strong greenback plays into some concerns for this company?
So actually going from the advertising, the fact that Netflix is offering a cheaper option is something that is relevant to those markets that could potentially be squeezed by a stronger dollar. So Netflix has been looking a lot at building out their content, their local language content, in order to onboard subscribers across the world outside of just the US and Canada. And in order to do that, they're offering a lot of different content, but a lot of people in other parts of the world who are seeing their cost of living pressures, that they may be more inclined to go towards the cheaper models. We already see this happening in the Asia Pacific region, where they built on their subscriber base in the last quarter. They managed to gain more subscribers, but the average revenue per subscriber went down, essentially meaning that people in the Asia Pacific region are opting for cheaper subscription options on Netflix.
Okay, Bloomberg's Berlin-based tech reporter Aggie Cantrell on the beat for Netflix, but some of the challenges as well for that company. Let's get back to Grace Peters, Head of Investment Strategy at JP Morgan Private Bank. Grace, we are early days into the earnings season, but some of the numbers have come through pretty strong, whether it's Nestle today, SML, the US banks, Netflix as well. How does that leave your view on the earnings resilience as we face up to these recessionary risks?
So I think resilience has been the key word when we think about data points over the last couple of weeks, whether it be US jobs, whether it be US CPI. The underlying message there is that the economy is proving more resilient than many expected. That's positive for short-term growth, but obviously has pushed up the terminal rate across the market. So as we enter earnings season, you're coming at a point that the market feels very pessimistic, and around that 3,600 is when we think a recession is sort of baked in. Now, as you say, earnings so far have proven indeed to underscore that story of resilience, and specifically around the consumer. When we think about, luxury goods reporting, some of the consumer staples companies, as well as loan losses that we've seen coming out of the banks. So I think that does support a short-term rally in markets from these very pessimistic levels, where it's all been about the multiple that we want to pay for the earnings stream. The earnings stream probably proves to be a little bit more resilient, but I do think downgrades are still coming to 2023 earnings. It's resilient, but on a declining trend.
He's very good about, asking about EBITDA. I would have just asked you, what show do you watch on Netflix? Mine is not, it's
Are you a Stranger Things fan?
I watch like The Dragon Prince and Troll Hunters, so that's the kind of level that we're at in the Lacqua household right now. Is there a danger actually that consumer spending just get hit all of a sudden? I mean, we're also coming out of 3 years of COVID, so maybe if people have less savings, they're still spending because they just want to have fun. Yes. And then it hits harder.
Yes, I think that dynamic is playing out. When you look at airlines, you can see clear evidence that pent-up demand is still driving the consumer. And at some point, that is going to break. It's going to break because of the cost of living squeeze, the tighter financial conditions. And I think a key catalyst for when that happens is really what happens in the labour market. Because, of course, you're happy to spend down those accumulated savings whilst you have job security. But at the point that you fear that in 6 months' time that you may not have that job security, then I think people will be far more reticent to spend. And that's another key thing we're watching for out of this earnings season. What are companies saying about the labour market, about their intentions to either stop hiring or indeed actually cut jobs? And since June, there's been a notable pickup in some of this commentary around reducing headcount, and with a lag, this is going to impact consumer spending.
Yeah, it really sounds like, Grace, you're looking at further pain across the equity markets and the squeeze on consumer as we look ahead into 2023. I want to leave on a bright note, though. You say in your notes to us, you are seeing the best opportunity in fixed income for years. Where is the entry point?
Yeah, so I think the entry point for fixed income, which has obviously undergone this seismic shift over the last 12 months is in US investment grade. And why do I say that? It's because as we go through more economic pain, we don't want to be exposed to a default cycle. So when you look at the yields that you can get in US investment grade, 5 to 6%, that's not dissimilar from the kind of returns we want to get out of equities over the long term. And you can get that in contracted cash flows higher up the capital structure. So that to us is a very good entry point now. I don't want to be too bearish on equities. I'm bearish on the economy, but equally the markets are forward looking. So, the sort of the 3,500 to 4,200 trading range through the end of this year still holds for us. Okay. We're at the bottom end of that, a bit of a bounce thanks to these corporate earnings, but I do think the fixed income opportunity is just very different to what we've had over the last decade, and therefore well worth taking note of.
Grace, thank you so much. Grace Peters there, Head of Investment Strategy at JP Morgan Private Bank. Now we'll have plenty more, of course, on the UK, on recessionary risks. Also, cranking up the pressure, UK consumer inflation comes in hotter than expected as the UK Prime Minister prepares to face MPs later today. Is her job safe? We'll be asking that question shortly. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Welcome back to the Open, 26 minutes into the European trading day. European stocks pairing some of the earlier gains now, just up 0.1%. Futures in the US still holding on to gains of 0.2%. Worth noting that banks here in the UK are taking a bit of a hit on the back of this front page story from the Financial Times that the Chancellor is looking potentially at a windfall tax on both banks and energy gilts. A bit of a divergent picture. You do have yields up at the front end by 6 basis points. The 10-year also up by 8 basis points, but the 30-year currently off by 4 basis points. So a bit of money flowing into the long end at 4.26. Coming up, we're going to break down all the latest and biggest moves in the FX markets, from the dollar to the yen that's flirting with 150. Stay with us. This is Bloomberg.
what about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading den. Here are your top stories. Inflation in the UK. CPI returns to double digits as food prices soar. UK Prime Minister Liz Truss faces PMQs with her premiership in question. We also have Netflix shares. Well, then streaming giants shoot up in late trading thanks to better new subscriber data after nearly a year of disappointing results. Plus, European stocks rise for a fifth straight day, but erase early gains as earnings get underway. So, Tom, if you look at the markets, of course, we're looking at the UK, but really a lot of focus on these earnings.
Yeah, let's update that headline because they're not rising now. They're currently down about 0.1%, a little over 0.1%. So that rally that we had seen over the last few days starting to lose steam. Yes, as Francine was mentioning, earnings have come through pretty strong, but there is that continued concern about recession risks. And again, inflation underscored by that print we got out of the UK, CPI coming in at a 4-decade high, 10.1%. The Bank of England expected by many now to raise rates by as much as 1% by November the 3rd. The DAX is currently down about 6 points. The FTSE 100 turning lower as well. Pressure on the banking sector on the back of reports from the Financial Times that the Chancellor is considering a windfall tax on both banking and energy. We keep across that story for you. Let's switch it over and have a look at how the sectors are shaping up then. And the last time I looked at the futures stateside, they were turning a little bit more negative as well, having been up about 0.2% at the start of the European Open. At the top of the list, technology still gaining 0.6%. Insurance also up 0.6%. But most of the sectors now turning red, led by real estate, retail. Just wondering if banks is in there somewhere. Banks still holding on to gains, up 0.5% despite what we're seeing in the UK space. Credit Suisse, we know, considering a deal potentially with Mitsubishi UFJ around some of its portfolio of loans stateside. And of course, the Credit Suisse story remains in focus as well as they lead up to that restructuring plan, that all-important restructuring plan, in a little over a week's time. Francine.
Now, the dollar inching higher this morning as investors weigh up earnings prospects against rising rates. Meanwhile, the yen continues to tumble towards 150 per dollar as traders watch out for any hint of subtle intervention. Now, the pound also lower after CPI came in hotter than expected. We're now joined by John Hardy, head of FX strategy at Saxo Bank. John, we could speak for about 3 hours on sterling, so that's exactly what we're going to do, but we do need also to talk a little bit about yen. What does sterling go from here? Are we back into inflation fighting, conundrum, or could we see a mess of things again?
Well, sterling, I think, looks relatively stable here. I think the recent volatility and the response to it with the removal of the new chancellor on board and the very strong fiscal responsibility message means we're unlikely to see the sort of scale of volatility we saw during the recent incident. But I think the dynamics are still very negative for sterling. The external deficits and those drivers are not going anywhere anytime soon. So if you can tell me that we're going to solve the energy situation for the UK and for Europe as well, And then I can say sterling could stabilize versus the dollar, but I'm afraid the dollar is going to continue a bit higher here in the near term. So cable could continue to settle a bit lower, but euro sterling probably more on the stable side and maybe only slightly weaker, the sterling versus euro, as we do have this much stronger message on the move both to shore up the budget deficit and the projections most importantly, but as well a stronger message on bigger hikes to come from the Bank of England.
So John, that pound-dollar dynamic is playing out, as you've described. It's playing out in the session today. You're seeing dollar strength across the Bloomberg Dollar Index, 0.2%, and the pound down around 0.4, 112. What is the next level that you're looking at for sterling?
Well, I mean, we blew such a big range widening, a big downside spike to below 105. So. I'm not thinking we're going to go there anytime soon, but looking towards 110 as a key technical level. We did trade a little bit below that as a psychological level as well. And then something like 108. Now, if we're going to start finding some resistance to this dollar move in Q4, which I'm suspecting we might, then I'm suspecting somewhere between 105 and 108 would be a zone of support for cable. But things can get hairy down there as well if risk sentiment is really deteriorating badly.
So that's basically saying, John, that traders hate the pound only slightly less than they used to maybe 2 weeks ago. What are you expecting BOE to do?
Well, they have to deliver. I think 100 basis points is a fair projection for the next rate hike. I think they would do better to go a bit to the upside, do 125 basis points, get the rate towards 3.5, indicating that they're more quickly getting on the path to 4 and then 5%. But certainly, they need to avoid a surprising on the downside, given what is unfolded. I think Bank of England does bear some responsibility for that as well. So, yeah, 100 basis points, that's a baseline. I think they would do well to go 125, but I'm not sure the Governor Bailey is on board with that.
Wow, 125, potentially 1% is what you're looking at on November the 3rd. I want to bring back, come back to a point you made about the dollar, John, because I thought that was interesting, and I'd like you kind of unpack the view. The fourth quarter, you think, is maybe when the dollar rally gets challenged. Just explain that for us.
Well, I'm just thinking that we're priced to go 75 basis points at the next Fed meeting on November 2nd. And that's taking us, within 100 basis points range of what the Fed sees as its terminal rate. I think we get to see enough data softening just enough to where we see the Fed slowing down on schedule. So, in other words, to add to further dollar strength, I do see more dollar strength near term, but to add to further dollar strength on top of that, you would need to see the market projecting the Fed even higher. And I just think we're starting to get there in terms of the pressure on markets and the Fed's just beginning to show signs of blinking, or at least the market having sort of fully taken in where the Fed is going to take rates by let's call it mid-2023. So that's just my model, my base case for what happens here. I think the risk could be, of course, that spills into Q1 of next year, but sometime in this time frame, fourth quarter, Q1 next year, I think this dollar cycle will need to start peaking out.
John, we're seeing bets on dollar yen maybe start to take root amongst Japanese fund managers. How does that change the equation for BOJ?
I'm not sure what changes the equation for the BOJ, to be honest. They've kept a remarkably consistent message through all of this. The message seems to be that they don't dislike yen weakness per se, but they dislike the so-called excessive moves and the volatility, one way, whatever that means in terms of the moves. So we're all on alert. They have shown they are willing to intervene, and they will at times. The last intervention, it lasted all of about 2 days in terms of keeping the dollar-yen rate below where it had been when it was 145 at the time. Of course, at that time, the U.S. yields continued to pressure higher. I just think the situation is quite simple. Until they change, the dollar per yen pressure will be higher as long as these U.S. Long yields in particular remain at 4% or higher still. And I think very near term, the U.S. data is not going to provide much leeway for yields to fall. Ergo, the dollar yen pressure remains to the upside. Intervention will be futile beyond a few days time frame. And I think the most interesting thing will be if the Bank of Japan is forced to blink before the interest rate cycle turns meaningfully. So, and that's interesting given the timeline we're on with Bank of Japan's leadership needing to change out next year.
Yeah, indeed. The legacy of Kuroda at the head of the BOJ. 149 currently on the yen, John. So just flirting that with that level, close to 150, of course, and potentially as we look potentially to further intervention, as you say, from the Bank of Japan. Not there yet. John Hardy, thank you, Head of FX Strategy at Saxo Bank, on the views of dollar, pound and yen. Coming up, EQT completes its acquisition of Hong Kong-based Baring Private Equity Asia, one of the biggest deals in this sector. We're going to speak to the EQT CEO and Managing Partner, Christian Sinding. That is next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We're starting to break markets where previously we've been very poor. So, the United States is currently flying, with Formula One, with its newfound popularity. And of course, out of that comes commercial revenues by attracting new partners and commercial partners to, into the sport. So it's a win-win scenario.
Is there more that can be done on that front to grow the fan base?
No, absolutely. I think we're just scratching at the surface, and what we're seeing is more and more youngsters coming to sport, more and more young girls coming into following Formula One, and I think that's a really encouraging thing. And I think that once they come to look at it, the most important thing is to keep them engaged. So the racing's got to be good, the product has to be good, it has to stand up for itself, it has to be inclusive, it has to tick all of those boxes.
Red Bull Racing team principal Christian Horner there speaking to me, of course, as part of a new show called Power Players. We speak with some of the most influential figures in the world of sport about their rise, the success of their sport, and what the future holds. Christian is, of course, a controversial leader, but this is a fascinating conversation. Anyone who's a fan of Formula One or Drive to Survive, the show on Netflix, should absolutely tune in. Let's go from Formula One then to private equity and the firm EQT completing its acquisition of Hong Kong-based Baring Private Equity Asia. That's as the Swedish investment firm looks to capture the region's bright prospects. The deal, worth $6.7 billion, makes it the biggest takeover of a PE firm by another in the sector. Joining us now is Christian Sinding, CEO and Managing Partner at EQT. Christian, what is the rationale behind this deal, and how does it position you for growth in Asia?
Well, great to be on the show again.
Nice to see you both. This is a really interesting deal for us. We're creating one of the global leaders in private equity. We're solely focused on what we call active ownership strategies. So it's all the strategies where you can be an active owner and really add true value to companies and properties as well. And we become truly diversified. You know, we're one of the leaders in Europe. We're growing significantly in the U.S. And with the BPA transaction, we become number one or number two in Asia. And with that global scale, we can become a smarter investor and return even better to our clients.
Christian, are you just a little bit stressed about becoming so big in a time where there's macro and the geopolitical environment is so uncertain?
That's a really good question. I think it's actually the opposite. You know, now we have diversification across asset classes. We have diversification across geographies. We're becoming more insightful investor with our insights from Asia. And if you look at what's happening geopolitically in the world right now, of course, Europe is in an uncertain place. We might be in a recession. The U.S. is, has rising interest rates quickly, might be going into recession next year, while Asia is still actually performing relatively well. So as a global firm, we're actually becoming more balanced. So I think the timing is excellent from that point of view.
Christian, when do you see investment and exit activity picking up?
You know, right now it's hard for buyers and sellers to meet. The bid-ask spreads for M&A is a little bit complicated. But transactions are being done in, we're a thematic investor. We're investing in secular trends in society. So the kinds of transactions that are happening are like our take private of Bill Trusts in the U.S. in the kind of $2 to $3 billion range, stable business software company. And this was a failed SPAC, actually, that we then took off the stock exchange and are going to build in the private markets over the next 3 to 5 years. So those kinds of deals are being done. The larger transactions, like our investment in Galderma, which was a $10 billion deal a few years ago. The capital markets just aren't there for that kind of deal. The credit markets aren't ready. There's not enough equity to be able to collect for that kind of transaction. But these smaller, mid-sized deals, which you can build through add-on acquisitions and organic investments, they're still going to happen. And it's hard to say when the market will really come back. But I think inflation and interest rates need to stabilize. And buyers and sellers need to find each other in a better way than today.
But Christian, what does the tighter financing markets actually mean for private equity in general and some of your funds? If you see liquidity in the public markets drying up, does it actually make it worse for private?
It does actually, because when we're making an investment, typically we're having probably 40% of the investment being done in equity and about 60% being done with credit, with debt. Most of the time that's coming either from banks or from the public markets. But to an increasing degree, it's also coming now from the private credit players. And just at this moment, the first two sources are basically not available in private equity. We have some availability in infrastructure and real estate, but basically not at all. So right now, the active investors are the private credit players that have a kind of a similar mindset and a similar time frame as we do in private equity. But those sources are probably maxed out around $2 billion. So the largest deals we'll see in this market are maybe 3, maybe 4 billion, something like that.
Christian, where are the pain points across the portfolio of companies that you own or invest in when they face up to this higher inflationary scenario? What is the kind of crunch point, and how much fat is there to trim of some of these companies?
Yeah, well, like I said, we're a thematic investor. We're investing in healthcare, in essential infrastructure, in the energy transition, in technology. So in a lot of those sectors, they're later. It's much later stage. So our portfolio overall is actually still growing double digit on the top line and the bottom line. But we see pockets of weakness. We see pockets of wage inflation. We see pockets where value chains are challenged. We see pockets of lower demand. So it's really spread out and not systematic yet. So I can't tell you that we're looking at a troubled portfolio. Not at all. Our portfolio is very healthy, but our mentality is that we're preparing for the worst and hoping for the best.
Christian, what does the worst look like? Like a protracted, long, deep, ugly recession worldwide? And if you see that, where do you see it first?
Yeah, I think you start to see it in more industrial companies or cyclical companies like the chemical companies or some of the building products manufacturers, those kinds of areas. And you're starting to see that in some cases in Europe and some countries. But as of yet, companies are still generally delivering pretty good profits. Employment is high, which of course supports the overall economy for the time being. So it's not systematic yet that we're in a recession. But if it really gets ugly, of course, then with the energy challenges in Europe, and we go into a deep recession, and that becomes a global recession like we had in 2008, then of course all companies over time become affected. The good thing about private equity is that we're not under pressure to sell anything. So when time turns bad, then we work our companies on cash flows. We work them on innovation, driving R&D, building them through add-on acquisitions, and extending the ownership.
Christian, thank you so much for all of your thoughts, actually. Come back soon. Christian Sinding there, the Chief Executive Officer and Managing Partner at EQT. Now, coming up a little bit later this morning, we'll also be speaking to the Nestle Chief Executive, Mark Schneider, about earnings at the Swiss food giant. Stay with us. We talk inflation, supply chains. We also talk about coffee. That exclusive interview, 9:30 a.m. London time. This is Bloomberg.
Today, St. Louis Fed President James Bullard sits down for an exclusive interview with Bloomberg's Kathleen Hayes. Will he offer any hint of an ease in the coming months? Find out today on Bloomberg Television and Radio.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. 52 minutes into your European trading day. Stocks in Europe have turned lower by about 0.1%. Futures in the US still holding on to gains of just over close to 0.4% for the Nasdaq futures, 0.2% for the S&P E-minis. Neil Kashkari saying you could see rates above 4.5% if core inflation doesn't come down, or at least you don't get to the point where it's starting to come down. Okay, let's return to our top story this hour. UK consumer inflation coming in hotter than expected, with September CPI hitting 10.1%. It comes ahead of embattled Prime Minister Liz Truss appearing in Parliament later. Let's bring in Bloomberg's John Stepek then for more on this. The question of inflation, John, back in double digits. What is the read across? More pain for consumers then?
Yeah, I mean, there's you can't really put a positive spin on this. I mean, we should be getting used to inflation coming in higher than expected by now because it does this almost every month. But yeah, so we're back at 40-year highs. If you look at the retail price index, that's now going up at 12.6% a year, which is the highest since March 1981. So this is a really unpleasant number, and it's really going to hurt consumers. You know, wages are rising by about 5 to 6% a year at the moment, but that's half the rate of inflation. So the standard of living is going down. We've just, you know, had the Chancellor replaced with a new Chancellor who's sort of pursuing a kind of austerity-like kind of package at the moment. So all of the help that people were expecting with their energy bills after April is going to be gone. And now this just really keeps pressure on the Bank of England to keep raising interest rates. You know, it seems very likely now that we'll get at least a 1 percentage point rise in November.
Yeah.
And that's going to keep pushing up, you know, your kind of mortgage costs. I mean, in a way, the bank is just playing catch up with the market now.
John, great to have you here today because also this is a huge new, you know, vertical for Bloomberg, right? You're launching a new website or certainly a vertical looking at wealth. So what we're trying to figure out in this cost of living crisis, if there's anything that people can do to shield themselves.
Yeah, thanks for having me on, Francine, so I can talk about my newsletter. But yes, no, they kind of, I mean, there are some minor silver linings from interest rates going up in that, for example, savers who've, you know, really suffered over the last kind of decade are starting to see interest rates go up in their savings. So if you haven't shifted your savings account for a long time, then it is worth looking around just now. Now, you're not going to get anything near inflation. But, you know, you can go from below 1% to, you know, as much as 5% in some accounts now. So it's worth looking if you've got cash. But I think the overall takeaway is that you have to now be much more active about managing your personal finances than perhaps you've been used to over the past decade or so. I mean, when interest rates were low and, you know, really not kind of moving much, you could assume, for example, that perhaps when you went to remortgage, you might have got lulled into a false sense of confidence that rates were always going to be low. And perhaps that even if rates were going to go up, they would go up slowly. But, you know, we've seen a frankly terrifying rise at speed in mortgage rates from, you know, knocking around 2.5% just 3 months ago.
So
and
John,
now, you know, sorry.
John, just very briefly, if you're looking to remortgage at this point, do you wait post OBR, post BOE? What would your advice be, just briefly, for someone looking at that prospect?
Well, honestly, I think everyone's circumstances are personal, but what you need to look at is what kind of pain you could take. So you just can't assume that. What I mean is, if it's going to break the bank, if rates go up any further, then you need to be acting now. So, you know, it's kind of, in an ideal world, yes, you would possibly wait, but you don't know what's going to happen. You know, and I think the fact that the bank is putting this pressure on the government by saying it's going to continue doing quantitative tightening in November kind of shows you the bank's mentality is we need to sort out inflation. So basically, if you're in a hurry and it's going to, you know, ruin your life if your mortgage costs go up anymore, you need to take action.
All right, John, thank you so much. John Stepek there with new wealth newsletter. You can subscribe to the daily newsletter Money Distilled, which looks at the biggest developments in the world of markets and economics. It launches today. I know I just subscribed, and it, of course, explains everything about inflation and the UK. We'll have plenty more on the markets. This is Bloomberg.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. UK inflation comes in hot. CPI returns to double digits as food prices soar. The Prime Minister, Liz Truss, faces PMQs today with her premiership in the balance. Streaming success, shares in Netflix jump in extended trading thanks to better subscriber data after nearly a year of disappointing results. Plus, risk reversal, European stocks drop after jumping at the open. Inflation fears batter sentiment. So first thing is first, let's check on the markets, and we did see a bit of a rally. I had actually a couple of traders and messaging me. Thank you, Anthony. I know you're a loyal watcher, and every morning you say, this rally, will it hold, will it not hold? Well, this time you were right. If you look at European stocks, they're down 0.2% with, I guess, that sign of confidence that the Bank of England gave yesterday. They're ready for a QT. It will start a couple of days before that November 3rd meeting. The market was thinking, right, well, it means that they think they can pull it off. Now we go back to inflation fighting BOE. So they're maybe not expecting the market chaos that we saw in the last couple of days, but it does not mean that the road and path ahead is easy. Sterling 112.72, yen a lot going on, or at least a lot of speculation, certainly from fund managers, betting actually that dollar yen will move, putting pressure on the BOJ, and then the U.S. 10-year yield 4.0607. Our Kathleen Hayes talking to James Bullard a little bit later on. That is a must-watch interview of the day. So let's also see whether we have a map of Europe to see if there are any differences, for example, between the DAX unchanged, the UK down 0.2%. So it's a bit of a wait-and-see situation. I think we are seeing a reversal, certainly compared to how we opened up an hour ago because of inflation fears, but nothing too ugly on the markets just yet. Now let's keep it on the UK. Inflation jumped more than expected to a 40-year high of 10.1%. It comes as embattled Prime Minister Liz Truss is due in Parliament, where she's hoping to regain authority amid the fallout over her government's mini-budget U-turn. Let's bring in Bloomberg's Lizzie Burton. So Lizzie, the inflation print and the BOE, it means that the BOE, because of the QT announcement yesterday, is now ready to go back to flat inflation, I guess, with everything it has.
Exactly. Andrew Bailey putting a confident foot forward with this statement that QT is going to start after the Halloween budget, though not at the long end of the curve, because of course that's where the market turmoil happened in response to Kwasi Kwarteng's mini budget. But we are back in double-digit inflation in September. I've just seen the Foreign Secretary James Cleverly in Westminster. He has said that this figure is concerning. But for the Bank of England at its November meeting, the debate was between 75 basis points and 100 basis points. This might tempt some members of the Monetary Policy Committee to go for 100, but really markets have pared back their bets of a really big hike since Kwasi Kwarteng was replaced with Jeremy Hunt as Chancellor.
The FT is reporting, Lizzie, that the UK Chancellor also examining extending the windfall tax, rating the profits of bank and energy companies. So this is significant because it could also turn businesses against them, I guess.
Indeed, and it's not. It's actually on top of the rise in corporation tax. Remember, that was the second big U-turn that Liz Truss had to make. But these are the, as he put it, eye-wateringly difficult decisions that the Chancellor Jeremy Hunt is going to have to make to fill that £40 billion hole in the public finances. And at the other end of the spectrum, we've heard that he's asked all government departments, bar health and defence, to shave 15% off their budgets. He hasn't promised to protect pensions, even though we've seen this inflation figure really squeezing vulnerable households that the Chancellor said they would protect, and pensioners are a crucial constituency for the Conservative Party. So when we get to Prime Minister's questions today, you can expect the opposition leader Keir Starmer to really focus on what he's dubbed austerity 2.0. And if the Prime Minister can't field those questions well, she might not make it to the end of the day. The Chancellor is going to address Tory backbenchers at the 1922 committee at 5 p.m. later.
Lizzie, thanks so much. Lizzie Burden there joining us, of course, from Westminster. I have to say the number of bets everywhere I look to onto how long the Prime Minister survives is not a great benchmark of how long she stays in power. We're now joined by Jeremy Stretch, head of G10 FX strategy at CIBC. Jeremy, I was going to ask you whether you took bets. I mean, we're kind of joking about it, but this is serious in terms of economic news because the U-turn is incredible. I mean, we went from, tax cuts, we're funding, we're fine, to austerity. So this is not even a U-turn. This is like a U-turn plus some.
Oh, absolutely. I mean, I've put out several notes over the course of the last couple of weeks headlined Anarchy in the UK, and it feels rather like that because we have seen this sort of completely anarchic relationship between politics and economics and the fiscal backdrop and the divergence between monetary and fiscal policy over the course of the last few weeks. And if you're an international investor sitting outside the UK looking in, then the UK doesn't look a particularly attractive place to invest. And so unsurprisingly, investors have been sitting on the sidelines or at least questioning as to whether the valuations in terms of sterling assets are appropriate.
So, Jeremy, this is not only about politics, right? This is just the fundamentals of this country and what the Bank of England will have to do to get inflation under control.
Absolutely. I mean, we had, after that mini-budget on the 23rd of September, fiscal and monetary policy actually in conflict, and that was really one of the concerns that the market had. Now, at least we're seeing fiscal and monetary policy getting back into the same page or the same construct in terms of the policy backdrop. So we're not seeing the sort of fiscal expansion that was really creating some of those problems in the Bank of England. But clearly the bank has difficulties ahead, and I think they will be forced to adjust policy by the most in the life cycle of the MPC, but we're looking for a 75 basis point hike from the MPC at the next meeting.
Jeremy, I know this is something that maybe is counterintuitive or a lot of people are not thinking about it that way, but if inflation needs to be under control, does the Bank of England really have to put this country into a deep recession, even if it could be short-lived, to make sure that inflation goes back? I mean, how much demand do they need to destroy?
Well, of course, this is exactly the same debate that we're seeing in the US, and I think we are going to see demand destruction in the UK because clearly we're seeing the average consumer being materially impacted by higher prices. Already we've got the impact of mortgage rates, and those substantial number of people are going to be mortgage refinancing at much higher levels over the course of the next 15 to 18 months. So I think we are going to see a fairly substantial downturn. We're looking for probably a 1 to 1.25% contraction in GDP next year. I think that's baked in. But I think the Bank of England isn't going to need to go quite as far as the market is pricing because I think the degree of demand destruction already that is going to be in place will reduce a substantial degree of those inflationary pressures.
So what's your call on sterling from now until the end of the year and then 2023?
So from now until the end of the year, I think sterling comes under a renewed bout of pressure and uncertainty as we see this political maelstrom play out. So I think we may well see another dip back towards the sort of 110 threshold. Yeah. I don't think that's we could see.
What happens after that?
Well, I think we then find a little bit of a floor. I think I think the parity calls have moved away, because I think the normalization of fiscal policy I think reduces the parity threat, which was clearly writ large after the mini fiscal event on the 23rd of September. I think towards the end of this year, though, we start to find a little bit of stability, and I think we can see sterling coming back a little bit against the dollar through the course of next year, but I think we also see sterling potentially coming under a little bit of pressure against the euro, and I think that might be the better way to play it over the course of the next few months.
All right, Jeremy, don't go anywhere, because we also have a great chart for you looking at the U.S. markets on edge over the U.S. housing market after a measure of U.S. home builder sentiment yesterday slumped for a 10th straight month. Our markets reporter, Valerie Teitel, is here to take us through it. Valerie, I came in and you said, look at this chart, Fran. So what is it telling us?
Thanks, Francine. Okay, so I have a chart on the exact data you mentioned yesterday, the Home Builder Sentiment Index versus U.S. unemployment. Now, the Home Builder Sentiment Index, as you mentioned, came in lower in a 10th straight month, but it's also posting the steepest decline on record, the fastest decline on record. So this is concerning, because we know that housing tends to lead the U.S. economy, and I've mapped this versus the U.S. unemployment data. So if we were to look, let's say, at 2008, 2006, where we saw a huge deterioration in U.S. housing and unemployment rose, people are jumping to conclusions again. We're seeing a very large drop in this sentiment. Does that mean, with the lag, of course, that we'll see unemployment rising? Now, yes, this chart might be concerning, but the one bright spot I can point to you, Francine, which is in my next chart, is that some people will say that the U.S. is less exposed to housing, and they point to things like the fact that residential construction spending now versus in 2006 is a bit lower. And we know that the housing market generally is a bit less leveraged. So that's the argument that poses maybe the U.S. economy can weather a housing downturn. We've heard from Bank of America and those results, for instance, that the U.S. consumer is still strong. So maybe things like that, compounded with the fact that we're a little less exposed to housing going forward, means that the U.S. economy could weather the storm.
Valerie, thanks so much. Valerie Teitel there. Now, you can see Valerie's charts, of course, on all terminal analysis via GTV Go on the Bloomberg terminal. You have some great little numbers that you can type on your own, I think make them your own. Steal Valerie's charts. I highly recommend that. We're back with Jeremy Stretch, head of G10 FX strategy at CIBC. Jeremy, you also don't need like a PhD in economics to understand that maybe everything's a bit skewed because of COVID. So we're seeing consumer spending holding strong until what needs to happen for that to completely fall off a cliff?
Well, you're absolutely right. We're seeing consumer spending holding up, but I think some of those narratives in relation to the housing market and the impact that we're going to see on higher prices in terms of discretionary spending, I think are going to come through quite quickly. I was particularly interested by that chart just being shown there about the home builders index and the flow through into unemployment. I think one of the big things in terms of the US dynamic is looking at that substantial fall that we saw in job vacancies over the course of the last month or so. That's, again, a little bit of a siren call to suggest that the labour market is showing some signs of fragility. If we see that reflected in terms of the Beige Book when that's released tonight as well, then I think that's consistent with a moderation in activity, and I think that will start to stem some of the more extreme assumptions in terms of where Fed rates are going, and I think that will play into the narrative of the dollar story starting to lose a little bit of momentum as we go into 2023.
I don't believe that. With the dollar, it just feels like there's everything supporting it, unless the rest of the world picks up.
Well, in a sense, I think that's true, and in a sense, what we've seen, of course, is the dollar has been the only story in town through the course of the last 12 months or so. It has been the growth story, it has been the interest rate story, it has been the safe haven flow. So I think if you start to take away some of that momentum in terms of the macro story, we take away some of that dynamic in terms of Fed tightening expectations, then I think you end up with a situation where the market is already relatively long of dollars, and you start to question whether you should add or extend some of those flows. And I think also if you start to see some of this moderation, or we can see this moderation in terms of gas prices continue, now of course that's a big if, but if we are going to see this moderation in terms of European gas prices persist, then that takes away some of that negative narrative for the Eurozone equation as well.
Talking about big ifs, what happens in Japan? I mean, the story there is absolutely incredible. Does yen force actually BOJ to do something?
Well, it's interesting. I mean, just as I was leaving the office, I was just looking at the 10-year JGBs, and it appeared to be the case that yield curve control wasn't quite operating in the way that it was intended or as we would have expected. Now, clearly, we're getting more. We've been heading inexorably towards this big line in the sand at 150. Now, the question is that going to be the threshold that's going to prompt the MOF back into the market? But the ultimate bottom line is that if you're talking about solo or unilateral intervention without dealing with the fundamental reason or rationale as to why the yen is cheapening up, i.e. the BOJ are in the completely opposite spectrum to every other global central bank, it is very much the case that throwing money against the dollar yen cross is going to be a relatively sort of almost throwing money into the air, because you're not going to get anything other than a short-term reaction. So the question is, are the Japanese going to allow that yield curve control threshold to moderate, and perhaps even without necessarily adjusting it formally, but just allowing those rates just to edge up a little bit? And that might be one of the precursors to seeing something of a top in terms of dollar yen.
I would suggest it's maybe the more exciting country right now. I know it's controversial.
Well, I mean, we've been waiting for a consistent period of Japanese inflation for the last 30 years. Now the BOJ have achieved it. Kuroda's achieving his aim towards the end of his tenure, but you have to question as to how that's come around and whether it is actually a beneficial story for Japan PLC.
Jeremy, thank you so much. As always, Jeremy Stretch, the head of G10 FX strategy at CIBC. Now, coming up, Netflix returns to growth as Hollywood breathes a sigh of relief that the worst may be over for the streaming giant. More on that in a moment. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Netflix shares jumped as much as 16% in extended trading after the streaming giant returned to growth. It follows 2 quarters of falling subscribers. Hit shows like season 4 of Stranger Things helped it add 2.4 million members, beating expectations. So for more on all of this, let's get straight to our Berlin-based tech reporter, Aggie Cantrill. Aggie, I'll ask you what you're watching at the moment in just a second, but it does seem like the worst is actually over for Netflix.
Yeah, it does seem that way, especially when it comes to the subscriber growth. Essentially, what we're looking at is the subscribers are growing again after 2 quarters where it was seen as this was a driving figure for the successes of the company in the last couple of years, and now we saw a drop in the first half of this year. That seems to have been done away with. But what's interesting to hear from Netflix is that they're also saying that they're not going to be focusing so much on subscriber growth, but rather the top line is going to be about the revenue going forward. This is also incorporated into the fact that they're bringing in a advertising-based model as well that will be priced cheaper than the non-advertised version of Netflix. And essentially, that's going to be incorporated into their revenue, as well as the cost of subscriptions and also partnerships going forward. So it's potentially growing into a more mature form of media product than purely based on subscription growth.
So, Aggie, what about this dollar dilemma? How is that impacting revenue?
Yes, so essentially, Netflix as a global company and a company that is keen to get subscribers all around the world is obviously concerned about the pressure on incomes across the world, especially with a strong dollar and what that means for other economies. And so now we're also seeing that, especially seeing as this platform has engaged with a huge amount of investment in local language content in places like Korea or where I'm sitting in Germany, and they're keen to get subscribers from other parts of the world. Essentially, what we're seeing now is that they would need to make sure that those subscribers are able to continue paying for these subscription models even when the cost of living is potentially squeezed.
Thank you so much, our Aggie Cantrill there, Bloomberg's tech reporter. Now coming up, cranking up the pressure, UK consumer inflation comes in hotter than expected, ahead of the UK Prime Minister trying to reassert her authority in Parliament. We'll discuss that next, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's return to our top story this morning. UK consumer inflation coming in hotter than expected. September CPI hitting 10.1%. It comes ahead of the embattled Prime Minister Liz Truss appearing in Parliament later. Let's bring in Bloomberg's John Stepek. John, you're here because you're also launching a new global newsletter focusing on wealth. So how do you save me money if I subscribe, which, by the way, I have in the UK? Inflation back in double digit. What does that mean for consumers like you and me?
It's really unpleasant, Francine. I mean, I'm glad to hear you've subscribed. Thank you very much. But yeah, so this is, inflation's at a 40-year high, back at a 40-year high. It puts more pressure on the Bank of England to raise interest rates. And at this stage, whether it's 3/4 of, a percentage point or a full percentage point, kind of doesn't matter. Interest rates are going up anyway. And in the meantime, the government's not going to help us out as much as it was hoping to help us out, because we've got Jeremy Hunt and a new kind of austerity-light type approach to budgeting. So really, I think the important thing for consumers and investors to understand is that the world has changed. This is, the new normal. We can't expect to sit and wait and hope that the era of ultra-low interest rates and low inflation comes back, because it's not going to come back, certainly not anytime soon. It doesn't mean that inflation is going to be in double digits, for the next 10 years, but it is going to be much more volatile. And that means that you need to take a much more active approach to managing your personal finances.
Yeah. But, so, John, is there anything that people can actually do to shield themselves apart from spending less?
I mean, obviously spending less is one option, but if you're looking for something that's a bit less kind of depressing, there are a few kind of minor silver linings here at the moment. With interest rates going up, the savings rates have gone up as well, so you can get better rates on your cash. It's not going to keep up with inflation by any means, but for example, you can get savings rates of upwards of 4%, sometimes 5% now. So if you haven't moved the cash in your bank account recently, do shop around and take a look. Another kind of silver lining, which is something that people coming up to retirement might want to take a look at, is annuity rates. Now, annuities have been basically out of favour with pensioners, since the pension reforms that allowed everyone to draw down the retirement pots. And that's because low interest rates meant that annuity rates were extremely low. Now, they have started to pick up again. It doesn't necessarily mean that they were the right thing for you, but it's certainly something to start considering again if you are coming up for retirement or even in retirement and want to look at your options for getting an income over the longer term. And I mean, other than that, there's also, your mortgage is probably the other kind of big thing. And I think that's the thing that's going to be scaring a lot of people at the moment, and that's understandable. It is scary, like interest rates have shot up on mortgages in a very short space of time.
We were looking, John, like more than 6%. It is pretty scary. We'll get more on that, because for the moment, I think a lot of the mortgages are fixed rates, but then I think it's middle of next year where some of those start trailing off. Our John Stepek. We'll have plenty more, of course, on the UK, but we'll also talk crypto next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
UK inflation comes in hot. CPI returns to double digits as food prices soar. The Prime Minister Liz Truss faces PMQs today with her premiership in the balance. Streaming success, shares in Netflix jump pre-market thanks to better subscriber data after nearly a year of disappointing results. Plus, risk reversal. European stocks are mixed after jumping at the open. Inflation fears better sentiment. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we need to look, of course, at pound. We had a good conversation with Jeremy Stretch on the fact that after the mayhem, after the chaos that we saw not only in sterling but in gilts over the last couple of days, we're going back to fundamentals. And fundamentals don't look that good if you're the BOE right now. So we had that 10.1% inflation, double digit, still at a 40-year high, but it was even higher than expected. That means that the market may be currently pricing in sterling, well, a bit lower as Bank of England increases rates by maybe a bit more than they were pricing in yesterday. We also had news yesterday of that QT. The main question there is how much QT translates into interest rate rises. Now, it's been a tough year for crypto with prices crashing and questions over its environmental credentials persisting. The industry is also facing increased scrutiny from regulators for its high energy consumption at a time when many countries are struggling to keep the lights on. We're joined by Adam Back. He's Chief Executive Officer and co-founder of Blockstream. Adam, thank you so much for joining us, because Blockstream actually also added so much in the equation. I know you can't walk in the street without people coming up to you and asking you questions about how it all started and where cryptocurrencies are going from here. Let's maybe start in El Salvador. What did El Salvador teach you about the usage of crypto going forward?
Well, I think an interesting story with El Salvador is kind of encouraging foreign direct investment so that they see a new rising sector and offer kind of offshoring corporations for crypto exchanges and things like that. And so I think it has been a success story for them, as increased tourism, and they've adapted it as a second legal tender as well.
I mean, there's also been, question marks and concerns about what it means longer term. Do you think I don't know if El Salvador is kind of, a template of what others, also just as small countries can do, and whether that would be a positive or a negative?
Yeah, I mean, I think it's a positive. You can see sort of similar things historically with Dubai offering free trade zones for international companies to operate in the Middle East, and Singapore, areas that are kind of phasing out natural resources or coming up in the world.
Does it only work in countries where they don't have a strong belief in some of the fiat currencies?
Well, it certainly brings it to the fore of their mind more readily, because they're relying on international remittances with high fees. They have unstable inflationary local currencies. But of course, in the West, we're experiencing inflation for the first time as well. So I think that's opening more people's eyes.
I mean, when you look at inflation and some of the market chaos that we saw in the UK, and also, other parts of markets worldwide, is there really a case that some of the cryptocurrencies are more stable going forward? Does it change the equation? Does it make it more mainstream?
Well, I think it means that people are looking to preserve spending power because they're thinking that their savings will be going back at double digits per year, just standing still. And it's very difficult to figure out where to put it. Stocks, bonds, everything looks uncertain. So while Bitcoin is still in the early phases of adoption, so it has some volatility, it at least has a growth story.
Yeah. And I know one of the things that you're talking about is Lightning and Liquid, which is basically something that is meant to make Bitcoin payments faster and cheaper. How far along are we in that infrastructure?
Yeah, Lightning, which is for sort of retail and micropayments, is really undergoing very rapid adoption, sort of double-digit percentage growth month on month, and a lot of development activity. And that drives the kind of use cases you see in El Salvador, kind of more payment-focused.
But do you think that will accelerate significantly if you're looking at cheaper payments, faster payments? Then, does it start rivaling some of the big credit cards out there?
Yeah, I mean, I think the payments use case is more seen in emerging markets, and in the West, you more see Bitcoin as a savings technology or inflation hedge.
You're here for a Digital Assets Conference. What's the mood like?
Well, I mean, the markets, Bitcoin and the wider market is in some disarray, but the financial institutions actually seem to be, steadily planning for the future and adding support for Bitcoin-related products, so offering the ability to buy Bitcoin with your brokerage account or with your savings account, that kind of thing.
Yeah, are a lot of the conversations on sustainability and, electricity usage going forward?
I think there's some misunderstandings about that. For example, the power that's generated is usually built to peak capacity, so typically at least 50% of power is unused. And we do some mining in Canada, in Montreal, and that province has all hydropower, about 50% unused. And actually, it's difficult to buy power because it's a government corporation, but there's enough unused power in that province to power the entire Bitcoin network. Okay. So there's actually a lot of surplus green power in the world. That's all hydro.
But is that even true? I mean, we're looking at record prices for energy. We're talking every day about the cost of living crisis. So does that change because of some of these inflationary pressures that we're seeing and the scarcity of energy?
Well, I think the problem is that it's difficult to transport energy over long distances, right? So Canada has a very low population density. There's 65 hydro dams in that region. There are other countries with such kind of imbalances of population to power generation. So Bitcoin sort of seeks out the low-cost, environmentally friendly power, basically.
You've also joined forces, I think, with Jack Dorsey in Texas.
Yeah, so we started a solar and battery-powered Bitcoin farm, and so it's under construction at the moment. And the point there is that Bitcoin is a sort of buyer of last resort, which makes power generation projects more profitable earlier in the cycle. And so it makes it easier for projects to get project financing to build green power and ultimately sell that onto residential and industrial use. So it's the solar install was done by Tesla, and it's using the Tesla Megapacks.
And so this is entirely solar. And do you see this being replicated in other states?
Yeah, so I mean, our thought is to, rather than having people debate about policy, to just build a project, open the finances so people can see the economics of it, and then replicate it much larger.
Okay. Adam, great to meet you. So you'll have to come back and we'll talk a bit more about this. Adam Back there, Chief Executive Officer and co-founder of Blockstream, joining us. A reminder, of course, you can access also all of the latest data and news on crypto on the Bloomberg terminal, going to CRYPGO on the Bloomberg terminal, CryptGo. Coming up next, we'll be joined by the Nestle Chief Executive, Mark Schneider, to talk about earnings and the Swiss food giant. Stay with us for that exclusive conversation. This is Bloomberg.
Season is here.
Stock is bracing for another big earnings season.
Everyone is expecting it to be poor.
We've had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind? There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Nestlé shares are surging as the world's biggest food and coffee maker pushes through the largest price increase in decades to try and shield the hit from inflation. Now, group prices are up some 9.5%, while volumes fell over the quarter. Let's talk and look at some of the brands underpinning its success. We live, of course, in a world of artisan caffeine. Nescafé Instant remains a huge money spinner for Nestlé. There's also the boutique offering of Nespresso coffee pods. It's one of Nestlé's high-margin products, but volumes declined and European sales have dropped after a strong 2021. Now, better news for Nestlé's dog food brand Purina, which is helping to drive growth. Pet food has done phenomenally well these past few years, partly due to a rocketing pet ownership during the pandemic. I am, of course, very tied to both pet food and also coffee. We're delighted to be joined now by the Nestlé Chief Executive Officer, Mark Schneider, for an exclusive conversation. So, Mark, thank you so much for joining us. I mean, it is pretty incredible that you've, passed on the biggest price rise in decades. Are you worried that people will buy less, that people will not be able to afford your products, especially in Europe?
Francine, good morning, and thanks for having me. Good to be back on the show. And look, this is a situation that no one wished for, and what we're trying to do here is protect our margins from some of the same pressures that every family feels. So we're seeing that huge upward pressure coming from energy, some of the agricultural commodities, and also transportation costs. And we're not even passing everything on because, as we saw with our half-year numbers, our gross margin has also been reducing over the last year and a half. So in a sense, we are struggling to catch up, and understandably, these numbers get all the headline, but they're only partially recovering some of the additional cost pressures that we're seeing.
But Mark, we're seeing different government support in different countries in Europe. So are there countries where you worry more about consumer backlash because of increasing prices, just because inflation is too high for them and their wages aren't following?
So far, we've seen only very limited trading down. I think the big unknown, especially for Western Europe for the fall and winter, is energy insecurity and how hard that is going to be hitting households' disposable income after energy costs. And that's the one where we are watching very closely and seeing how the fall and winter will play out.
I mean, when do you find out whether consumers are switching to white labels? If you look at the trajectory, again, of consumer spending, of the cost of living crisis, of energy prices of the winter months, where do you think, or when do you think peak consumer angst is?
Well, when it comes to white labels, do keep in mind we're not only offering premium brands. We have brands across a number of price points. And so when there's trading down, it doesn't mean we lose that consumer. We may be able to have a compelling offering at a different price point. We're also promoting more in terms of value pack and larger pack sizes. With the white label, you've seen a bit of a recovery because most of these private label brands have been suffering a lot during COVID times. Some of their supply chains weren't holding up as well as with the branded goods manufacturers. So some of the recovery there was already ongoing. We now need to watch over the winter exactly how the situation unfolds.
So, Mark, when you look at all the products that you offer, all the categories, which category do you think is more resilient to price hikes?
I think in general, those large key categories we have, like coffee and pet care, tend to be very resilient. We know that from past crises and also from other markets around the world. So clearly, there's a lot of allegiance here to these brands and to these products, and I think that bodes well under the circumstances.
I mean, to protect your margins, there are, other things that you could do, increase, for example, making some of the packaging smaller, or the size is smaller, but at the same price point. Has that been done? Will it be done?
Well, a key part for us was to actually look internally and see where we can find efficiencies so that not all the pressures here that we saw on the gross margin arrive at the bottom line. And so a lot of internal cost savings have happened over the last year and a half. And then we also have undergone a very aggressive program, which we call Cut the Tail to Push the Head. So this is low rotation SKUs being phased out in favor of high rotation, more successful core SKUs. That helps to improve supply chain efficiency. And the other thing is it really improves visibility of those core offerings. So it helps sales down the line.
So your volume measure, which is basically real internal growth, actually contracted in the fourth quarter, but on the 9 months, it was rising. What does that tell you about price pressures?
Well, I think it's important that we're living at a very volatile time and that we don't interpret the volume development only in response to pricing, because we're also lapping very, very strong quarters from last year due to a very strong COVID demand. People were still spending a lot of time at home in third quarter last year. And so that's where it makes it so hard to read. Some of it is simply the high level of comparables. Some of it may be the early response to some of the pricing. Some of it is supply chain constraints. And some of it is what I mentioned earlier, and that is our voluntary phasing out of certain SKUs as we're trying to seek efficiencies to offset inflation.
Mark, talk to me a little bit also about the outlook for wage inflation next year. So how much will that erode profitability? How much do you have to increase wages of your workers?
That's a very important question. We're watching this very closely. In most countries, those negotiations for 23 will unfold over the winter and during the first quarter. So it's very hard as of this point to give a precise estimate. Every country, of course, has its own calendar, but this to me is a key item to watch out for during the winter and beginning of 23.
I think you also said that you were suffering supply chain constraints, for example, in the water business and in North America. Can you give us more details on that?
Yeah, so North America is mainly around our pet care business. As you know, that business has stepped up tremendously during COVID times with so many people adopting pets and, a one-time significant step up in demand and then good continued growth on top of that. So here we're adding capacity, which should come on stream later this year and next year and help to alleviate the situation. Water, interestingly, when it comes to carbonated offerings, CO2 has become scarce. As some of the industrial gas producers have less CO2 available, we were supply chain constrained in that area.
Is there anything that you can do to protect yourself against some of these supply chain constraints? I know you were quite good at dealing with them during COVID and lockdown.
Yeah, and look, it's the same recipe now. Keep your head down, focus on your operations, focus on the daily block and tackling. So when I look at the way we run the company now, it's a lot more operational, down into the weeds and the details compared to the time before when there was more time available for longer ranging strategic thoughts. Now it's really day to day trying to make sure that these supply chain constraints remain limited and do not morph into bigger problems.
I mean, do you expect them to potentially morph into bigger problems, or does it actually ease in 2023?
I think what we're seeing now with some of the economic activity slowing down, I think I'm seeing a slight improvement on supply chain issues around the world, especially when it comes to global shipping. So some of the traffic and the demand is down, and I think that's helping to ease things. But I think it's too early to call this like an end to the crisis. So it's something we still watch very closely. And then hopefully, as we go through the rest of this year, early 23, that easement trend will continue.
Yeah, and actually, same question, Mark. I don't think, I know you talked a little bit about wage pressure and wage inflation, but overall, when are you expecting inflation to peak? Does it get worse in 2023, overall inflation, before settling down?
Yeah, so what we're clearly seeing is some of the inflationary pressures continuing. So this is not over yet, and some of this will kind of go into 23. When exactly it's going to peak, I think a lot of that has to do, especially in Western Europe, with the energy situation, because that's a big driver of inflation, and also, of course, has a big impact on our cost position and our manufacturing and distribution cost. So that's the big unknown, but some inflation will certainly continue into 23, even just because of the full year effects of the rises that we have seen in 22 so far.
Mark, where do you plan to position Seattle's best coffee? Is it going to be high premium with other brands?
So to us, this is a very exciting brand that we got to know through our Starbucks Global Coffee Alliance that we struck in 2018. It is positioned less premium compared to the original Starbucks brand. It's more of a mainstream, mid-range brand, very trusted, in particular in the United States, building, of course, on Seattle's reputation as being one of the core places to get a good coffee in the United States. And so we came to like this brand a lot, and it helped to also cover a gap price point wise that we had before. And so very excited now to get complete ownership of this brand and to continue to develop it going forward.
Talking about coffee, Mark, and getting a good cup of coffee, what happens with Nespresso? Can you increase prices of Nespresso capsule? Is there a limit to how much people will pay for those capsules?
So, of course, being faced with the levels of inflation we're seeing, we also had to adjust prices there. The good news is that the basic interest in the brand and portioned coffee or capsule coffee continues to be unabated and very strong. What you're seeing when it comes to growth rate compression is mainly due to the very, very high quarters that we're lapping from last year. That was unavoidable because, as you can imagine, people working from home, consuming coffee from home, portioned coffee was the go-to solution. And now as they move back to the office, we're seeing some of that ease. The fundamental underlying demand is still very strong. We're very bullish on this brand.
Yeah. Mark, I was actually looking at my shopping basket, right, in grocery stores, and I was trying to think what I was going to cut. So do you have a crystal ball? And, if things get worse, if people need to save, let's say, 10% of their spending, and you look at a shopping basket, which one of your products would they buy less of or change to a cheaper brand?
Everyone, of course, would love to have that crystal ball. And again, the situation right now is pretty volatile and very, very hard to read because you're having the economic uncertainty, you're having some of the inflation that had happened already, plus then you have these very, very uneven and volatile year-over-year comparisons due to the pandemic. My personal guess is it's not so much about cutting one thing or another. It is mainly about, some of the trading down, so more of the trading down that we started to see. And that's why it's so important that we offer brands at different price points. The other obvious one in food is if you need to make ends meet, eating out less is a quick way to do that because the value proposition between a meal in home and a meal out of home is vastly different. And of course, out of home is also hit by the labor constraints and some of the rising labor cost.
Mark, thank you so much. As subscriptions to cooking recipe websites increase. Mark Schneider, the Chief Executive of Nestle, of course, on these results. Now, coming up, the UK Prime Minister prepares to face Parliament with consumer inflation hitting a 40-year high. We'll have plenty more on that shortly. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
We're starting to break markets where previously we've been very poor. So, the United States is currently flying, with Formula One, with its newfound popularity, and of course, out of that comes commercial revenues by attracting new partners and commercial partners to into the sport. So it's a win-win scenario.
Is there more that can be done on that front to grow the fan base?
No, absolutely. I think we're just scratching at the surface, and what we're seeing is more and more youngsters coming into sport, more and more young girls coming into following Formula One, and I think that's a really encouraging thing. And I think that once they come to look at it, the most important thing is to keep them engaged. So the racing's got to be good, the product has to be good, it has to stand up for itself, it has to be inclusive, it has to tick all of those boxes.
Well, that was the Red Bull Racing Team principal, Christian Horner, speaking with her very own Tom McKenzie at the F1 team's headquarters, and you can watch more of that interview on Power Players, a new show where we speak to some of the most influential figures in the world's sport. More Bloomberg Surveillance up next.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
There's a genuinely large cloud of uncertainty out there.
A lot of factors are putting us back into a more traditional 1970s, 80s, and early 90s mindset.
We believe that these markets require patience, diversification, and discipline.
There's so much fear out there, and it's been priced in.
We're priced for a lot of bad news.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. 40-year high. UK inflation returns to double digits, intensifying pressure on the government and the central bank to act. Meanwhile, Prime Minister Truss faces Prime Minister's questions with her premiership in question. And return of Netflix. Shares in the streaming giant surge as subscriber growth signals the worst may be over after a string of disappointing results. Plus, Wall Street continues to add headcount. The biggest US banks are expanding their workforces even as executives talk of cutbacks. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, European equity markets kind of losing momentum as we go through today's session. A strong dollar and higher rates in focus.
Yeah, and they were the focus too in Asia overnight, where we definitely didn't see that much momentum coming through after 2 days of rallying here in the United States. It was a mostly down day for Asian equities. You did have some outperformance coming from Japan, but with losses in China and Hong Kong, the MSCI Asia Pacific Index as a whole down about 0.8%. And a lot of that was the drag led by technology. The Hang Seng Tech Index down about 4 percentage points. The likes of Alibaba, Tencent, JD.com, all of those big weights on the Asian session. Again, comes back to that higher rate story that Anna was just talking about. And on the subject of higher rates, we are seeing upward pressure on bond yields globally, and Japan is not immune to that. Take a look at the 10-year JGB yield. If you have your Bloomberg terminal up, it'll show you that it's 0.257%. What is that? Above the 25 basis point cap that the Bank of Japan would like to see on that 10-year JGB yield. Puts Kuroda & Co. in a very difficult spot as we continue to see the Japanese yen weakening against the U.S. dollar. It is weaker once again this morning. 149.44 is where we trade. We are pushing near 150 on dollar yen. Quite a puzzle for Japanese policymakers, but of course that's not a yen exclusive story, Matt. Pretty much everything is weaker against the U.S. dollar today.
Yeah, we do have the dollar up today for sure, but still fascinating to see the yen getting back close to that record weakness. We have S&P futures down, although only marginally, and it does look like it's the UK inflation numbers that pushed us down. We had been up on futures throughout the night, and we finished up in the cash trade yesterday, more than 1% to about 37.20 on the S&P 500. So much better than the 3,600, 3,500 levels that we've been seeing over the past few weeks. The U.S. 10-year yield is coming back up as investors let go of that debt. It's both a tailwind and a headwind for stocks. Obviously, investors feel comfortable enough to let go of the perceived safety of government debt. On the other hand, as these yields rise, they become a bigger competitor to stocks for returns. The Bloomberg Dollar Index, as Kaylee mentioned, gaining 1343 is the level here, and we have the dollar up against most major currencies today. So dollar strength often a problem for stocks that could hold back a little bit of a rally. And NYMEX crude, I just wanted to point out, Right now, we're trading at just $83.04 for West Texas Intermediate, and we've seen lows around $60, highs at $125. So as we talk about the SPR story today, keep in mind that we're still at a relatively low end of the range that we've seen for oil over the past year or so. Anna, what do you see in terms of European stocks?
Yeah, well, this is the picture for European stocks then, Matt. It's pretty red across the board. The CAC 40 fairly flat, but elsewhere we're seeing selling of European stocks in the main. I should mention the Dutch market actually up by 0.4%. Tech stocks to the fore there. Broadly speaking, an interesting data point just dropping on the Bloomberg, the Euro area September inflation number coming in at 9.9%. This is a revision down from 10%. That's the number we previously had in mind. This is the final reading, so at the margin, perhaps a little bit of good news if you're looking for those numbers to come down, the fact that we're the right side then of that 10% double-digit mark. Not so in the UK, more on that in a moment. This is what we're seeing on a couple of UK assets, and this is the yield curve we've got here for you on gilts. So the 2-year yield here, the 30-year yield here, and you can see they're moving in opposite directions. And yes, there's inflation number here, but there's also the fact that we've heard from the Bank of England and what they plan to do with quantitative tightening. It is going to be starting almost exactly at the time it had been planned, give or take a day or so. But what's interesting is they're not going to be selling at the long end, only at the short end. And so in anticipation of that short end supply, you see some selling going on there and those yields pushing higher. So that's what we're seeing, that flattening of the yield curve, reflecting expectations around QT in the UK. The other UK story is, though, as Matt mentioned, what's going on in inflation. We'll get more on this from Lizzie Burden shortly, but really interesting to see the way the dollar gains, the pound sells off, as if the market is not really thinking about links between that inflation print and hiking central banks and therefore strengthen the pound. They're instead thinking about what that means in terms of weakness in the UK economy. Here's the German 2-year yield, because we saw an incredibly weak, we saw a weak auction when it came to the 7-year part of the German debt curve. But I put this in here because we're seeing actually more movement at the 2-year. We are seeing some selling and some yields going higher. That seems to be the broad story across what we're seeing in the European debt markets today. And Lloyd's in focus. This is the banking group, down by 4.3% today. As we see the Chancellor in the UK getting ready to try and find all of that missing money, essentially fill the holes in his fiscal plans. Is he going to turn to energy companies? Is he going to turn to banks to try and increase taxation there? There's already a surcharge on the banking sector above and beyond what is normal on corporation tax. That is something that those in the city are going to be pushing back against, but it is for the moment that fear weighing on banking stocks. Now let's stick with themes around the UK and go to Westminster as UK inflation returns to double digits, jump back over that 10% mark then. For more, we're joined by Bloomberg's Lizzie Burden, who has the focus on that inflation print for us. Your thoughts, Lizzie?
This is driven by food price growth, Anna. We're back to where we were in July, a 40-year high, and significant that we're in double digits. I'm sure that there are members of the Monetary Policy Committee at the Bank of England who will be tempted by this to vote for 100 basis points, perhaps. But I have to say, since Kwasi Kwarteng was replaced as Chancellor with Jeremy Hunt, markets have pared back their expectations from that 100 basis points, and now it's back to a debate between 75 and 100. We've also learned, as you say, from the Bank of England that they are going to get on with quantitative tightening after the Halloween budget, but they're not going to do it at the long end yet, which for me is a statement from the BOE to say we're reprioritising this fight against inflation. We're not forever going to be a backstop for the government, but we have got a firm eye on financial stability, hence the compromise, because of course it's at the long end where you saw that market turmoil after the mini budget. But this really is a confident statement from the Bank of England Governor Andrew Bailey.
You have to wonder how many people are going to actually dress up as Kwasi Kwarteng's mini budget this Halloween. Lizzie, the Financial Times is reporting that the new chancellor could raid bank and energy company profits. What does that mean for the competitiveness of the UK?
Well, when you factor in one of the other U-turns that Liz Truss has had to do was that she's actually going to raise corporation tax, and you throw in employment taxes as well, UK Finance is warning that London could be less competitive than other financial centres like Frankfurt and New York, and this at a time when Liz Truss has raised the stakes and said that her premiership's going to be all about growth, growth, growth. So it's a very difficult challenge to meet. But of course, Jeremy Hunt really needs to plug this £40 billion hole in the public finances. At the other end of the spectrum, we're hearing that he's asked all government departments, bar health and defence, to shave 15% off their budgets. He's not even guaranteeing that he'll protect pensions when pensioners are such an important constituency for the Tory party. So Liz Truss facing Prime Minister's questions later today. She'll have to hope that she can give the performance of her life, because Hunt is meeting backbench Tory MPs at 5 p.m. today. If she can't pull it off, could be curtains for Truss today.
All right, well, we'll look forward to your reporting throughout the day. Bloomberg's Lizzie Burden from Westminster, thank you so much. Meanwhile, here in the U.S., Minneapolis Fed President Neil Kashkari says the Fed can't pause hikes if inflation is still rising.
If we don't see progress in underlying inflation or core inflation, I don't see why I would advocate stopping at 4.5 or 4.75 or something like that.
So essentially 4.5% doesn't necessarily mean they're done. And later today, we'll get another take. We'll hear from St. Louis Fed President Jim Bullard, who will be speaking with Bloomberg at 3:30 p.m. New York time, 8:30 p.m. in London. Anna?
Now, Netflix shares are up after the streaming giant stemmed its subscriber losses in the third quarter. Hit shows like season 4 of Stranger Things helped it to add 2.4 million members, beating expectations. Reed Hastings, chairman and co-CEO of Netflix, spoke yesterday.
Well, thank God we're done with shrinking quarters. So that's a big feeling of we're back to the positivity. We still got FX, so that's a huge hit, as we've explained. So that's not going to go away. But other than that, all the stars are lining up very well for us.
Reed Hastings there. Let's get the latest then on this business. Aggie Cantrell joins us, our Berlin-based tech reporter. Aggie, is the worst over then for Netflix? Can we say that after they've turned this corner?
So essentially, when you're looking at the subscriber numbers for this quarter, that has massively beat estimates. That's incredibly important for Netflix, especially seeing as that subscriber growth has been such a metric that they have stuck to for so long. It's been crucial for them to indicate their growth, and for the last 2 quarters, that has been very bad for the company. So going forward, they're also projecting further subscriber growth over the holiday period, over the 4th quarter this year, and that's going to be, that is an important figure for them. But it's also interesting to point out that the company themselves have been saying now that they're moving away from talking about subscriber growth as a key focus. They're going to be looking more at revenue as a whole. This is also incorporated into the fact that the company is now looking at bringing in an ad-based option for people who want to pay a lower amount, but will also have ads per hour on the platform. And so they're now looking at focusing on top-line revenue more than they are on subscriber growth.
Okay, Aggie, so they'd like us to look at the top line, but what about the bottom line and when it comes to profitability, especially considering the stronger dollar? What kind of dilemma does that pose for Netflix?
So they have flagged the fact that sales and profits will be impacted by the stronger dollar. And it's important to note that essentially Netflix sees itself as a very global business. It's got local language content in a huge amount of the countries in which it operates. And that in order to get subscribers not only in the US, but overseas as well, they also are concerned about the price pressures on consumers, especially in a time when incomes are being squeezed and when inflation is essentially requiring people to look at their pocketbooks and see where they can save money. And so in order to go forward and gain more subscribers and gain more revenue going forward, they need to make sure that they're able to offer something at a price point that people can afford.
Aggie, thanks very much. Bloomberg's Aggie Cantrell with the latest on that particular tech story. Over to Wall Street. Wall Street banks, the biggest US banks, keep adding to their workforce, apparently, even as executives talk of scaling back. Goldman Sachs, Morgan Stanley, Citi, JP Morgan, and Bank of America, that's almost all of them, isn't it, all reported increased headcount for the quarter. Of the 6 largest US banks, only Wells Fargo cut the size of its staff. Bloomberg's Charlie Wells joins us now for more. Charlie, good morning again. I mean, we know about the tightness of the labour market broadly in the United States. We thought that things were going to look a little different, perhaps, given the rhetoric we've heard from banking executives.
Well, this is really striking because for some deals teams at some of these banks, it had been an incredibly slow spring, an incredibly slow summer, and the fear was that the guillotine was going to fall in the autumn. But the numbers just aren't showing that. It seems like the guillotine may be going in a different direction. So at 5 of the 6 largest banks, actually headcount was up on the quarter and it was up on the year. If you zero in on Goldman, actually compared compared to last year, their headcount's up 14%. From last quarter, it was up 4.5%. Now that's 2,000 jobs. This is despite the fact that, of course, Goldman has brought back those COLs, those annual performance reviews to take low performers out of the firm. That doesn't seem to have started yet. That hasn't seemed to trickle through just quite yet.
In terms of rates, in terms of FX, the traders have really made a huge difference in revenue this quarter, saved the quarter in a lot of instances.
Yeah, Matt, that's a good point. So the traders have sort of saved the deal makers here, and they've actually given trading desks their best third quarter ever. When you look at rates and when you look at currencies, if you look at the 5 largest banks on Wall Street, their fixed income trading teams brought in revenue that was up 22%, so that beat expectations. If you look at Bank of America, they had no trading loss days. Now that is pretty striking, especially when you compare that, of course, to investment banking fees across Wall Street. Those were down over 50%. Now this takes us back to that question that we were talking about before about jobs. When do we start to see some of these teams that have literal tumbleweeds blowing across their floors start to see some headcount reductions?
All right, Bloomberg's Charlie Wells, I can see that image. Thank you so much. Now let's get back to the U.S. equity markets and take a look at some stocks moving in pre-market trading, one of them being United Airlines. It reported after the bell yesterday, and it's more about the guidance. It's guidance for profitability in the fourth quarter. Earnings per share, that nearly double what analysts expected. They expect EPS of between $2 and $2.25. So that is giving a nice lift to the shares. It really underscores the demand still there in the aviation space. United up about 6.2% before the bell. Now, of course, we also just ran through Netflix's numbers with Aggie. I would note, though, that it's not just translating into Netflix's shares, which, yes, are higher in pre-market trading this morning, but the more positive view on subscriber additions is lifting other streaming-related companies as well. Roku up 3% and Disney up about 2.5%. It is a very different story for one stock, though, and that would be Olaplex. They make hair care products like those fancy shampoos. It cut its outlook for the full year, citing a slowdown in sales momentum, and you are definitely seeing a big impact on the shares in pre-market trading, down a whopping 42.5% before the bell, Anna.
Wow, that is a sizable move. Coming up on the program then, Kaylee, we will get to what's happening in equity markets more broadly. Beata Manthi joins us, head of European equity strategy at Citi. What do we brace for over the winter? And the White House is open to releasing more crude from U.S. emergency reserves. More on how that could affect the midterm elections ahead, the politics of oil, of course. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York, Anna Edwards with us out of London. We are taking a look at the front end of the curve right now and the spread between historic terminal rates and the 2-year yield. Historically, it's pretty big. It's been diminished of late, but right now, if you take what the market is predicting as the peak rate of almost 5% and the 2-year yield, it looks like we have a long way to go. Another 50 basis points higher, maybe we could eclipse 5%. Joining us now is Ven Ram, Bloomberg Markets Live team leader, to tell us about his theory that we could see a pretty big return on the 2-year treasuries. Ven?
Morning, Matt. That's absolutely right. I mean, we've got two-year treasuries have had a miserable year so far, and it looks like that's going to continue. Because, as you said, with the 5% terminal rate, 2-year yields will climb to about 5.45 by my calculations, and that's what the history shows. And that is predicted on a 5% terminal rate. Now, the terminal rate has been a moving target in this cycle, as we have seen. And the Fed started with a terminal rate of 2.1% at the start of the year, if we remember. Now that's being pushed up to 4.6%, and the market's pricing 5.5%. And if inflation continues to force the Fed to keep going, i.e. if the terminal rate is pushed out to say 5.5 or 6%, then sky's the limit on the 2-year yield, really. I mean, we could go to much, much higher than 5%. We had Mark Mobius say on Bloomberg TV the other day that interest rates may go to 9%. Woe betided if it happens, there will be chaos in the markets.
Yeah, 9. That was a staggering call from him. Ven, thinking about the UK gilt market then, it's been quite a journey in recent weeks, of course, up and then down again in terms of those long-end yields. Now it seems that the gilt curve is pricing in what the Bank of England says it's going to do. Is that what's driving things? We've had the inflation print today, but of course the Bank of England has set out their QT plan, and it doesn't involve the long end.
Absolutely, and I think that the markets are moving much more to what the BOE is going to do going forward. And the BOE's terminal rate, as priced in by the markets, is much higher than even the Fed's. And the markets are looking at 530 and probably 550 for the BOE. And we are at, the BOE is at 225 now. So there's a long way for the BOE to go. And it's a similar story for the front yields. We have had a miserable year for front-end gilt yields, and they're going to face yet more losses. And as you mentioned, the QT is going to be focused on the front end, which means even more supply for the front end to confront, and that will push yields much higher. So we are looking at, a much more volatility, realized volatility on the front end.
Ven, thanks so much. Thanks for joining us. Ven Ram from the Bloomberg Markets Live team. For further market analysis, check out MLIV Go. That's the function to use on the Bloomberg terminal to find the Markets Live blog. This is Bloomberg.
What's happening on Wall Street?
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Ukraine's military claims 13 drones made in Iran were shot down in the Mykolaiv region overnight. It happened as officials have reported more attacks against the country's infrastructure. The Biden administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil have triggered a brain drain in the city. And Mitsubishi UFG Financial Group is said to be evaluating an acquisition of some loan portfolios from Credit Suisse to expand its U.S. business. Japan's biggest lender is also vetting bundles of the Swiss bank's global loans in various sectors. Credit Suisse is racing to raise funds with just over a week to go until the unveiling of a critical turnaround plan. And of course, Anna, that plan could potentially include thousands of job cuts and a significant reshaping of the business.
Yeah, we wait for a fuller picture of that reshaping of the Credit Suisse business. Not a day seems to go past when we don't have a story about somebody circling for something at Credit Suisse. When we come back, we'll talk to Beata Manthi, head of equities at Citi. We'll get a take on European stocks. This is Bloomberg.
nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. 40-year high. UK inflation returns to double digits, intensifying pressure on the government and the central bank to act. Meanwhile, Prime Minister Truss faces Prime Minister's questions with her premiership in question. The return of Netflix. Shares in the streaming giant surge as subscriber growth signals the worst may be over after a string of disappointing results. And Wall Street continues to add headcount. The biggest US banks are expanding their workforces, even as executives talk of cutbacks. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, European equity markets finding it hard to continue the enthusiasm we've seen of the last couple of days today, although the focus has been on a recovering or at least resilient profitability story from global corporates, but also a strong dollar.
Yes, and the concern, of course, in Europe has really been the inflation picture. That also dragged U.S. futures down for about an hour, but we're back up into positive territory. Take a look right now at S&P futures, up just 0.2%, but after a pretty strong close yesterday, we were up 1.2% to 3720 on the S&P 500 yesterday after a couple days of very strong rallies. So we could see further gains in just about 4 hours when the U.S. equity market opens. Investors are willing to let go of the perceived safety of government debt, although that does mean that the 10-year yield climbs well over 4%. In fact, you can still find 4% yields across the curve, and we just heard Van Rom saying he thinks the 2-year is going to go to 5. That could be a headwind for equities, as then bonds provide a pretty serious competition in terms of returns. Bloomberg U.S. Dollar Index gains today of about 0.3%, 1343.50, the level. We can see it gaining against most major currencies, and Kaylee was just showing us that the yen is now trading at almost 150 per U.S. dollar, so real weakness there. And then NYMEX crude right now up about 1.2%. 83.80 is the level, so relatively low in the range that we've seen over the past year, between about $65 and $125. And yet we're talking about releasing more oil from the strategic petroleum reserves. We'll hear about that a little bit later on in the program. Kelly, what do you see in terms of pre-market movers?
Well, we got to talk about some of these earnings, Matt, including from Netflix after the bell yesterday. Maybe the worst is indeed over. At the very least, they are no longer losing subscribers after 2 quarters of that. They added 2.4 million subscribers in the third quarter, plus they expect to add another 4.5 million more in the current period. So yes, you have some dollar headwinds at play there, but overall, investors seem pretty positive on the picture for Netflix now. The stock is up 12.8% before the bell. Also a big move for United Airlines after its own report and forecast for the current period. It thinks profit in the fourth quarter is going to come in more than double what analysts had anticipated. So that stock up 6.2%. Pretty strong picture in the airline space right now. Intuitive Surgical also beating on the top and bottom line. It's up about 10% before the bell, but plunging to the downside is Olaplex. They make shampoo and other hair care products. Seeing slowing sales growth momentum, though, cutting their full year forecast as a result, and that stock down a whopping 42% or so before the bell, Anna.
So those are big moves. Not such big moves now overall when it comes to European stocks. Half an hour ago we looked and we were negative across European equity markets. We started out in positive territory, so we've been fluctuating. Now we're pretty flat really across the European stock 600, entirely flat, let's say. We have some strength to the technology sector. Certainly that's lifting the Dutch market. Some weakness in the banking sector in the UK. So some divergent moves across different geographies. Here's a bit of the UK story though, in the shape of the gilt curve and the different moves we're seeing at different ends of it. We've got the 2-year yield at 3.6, the 30-year at 4.17, moving in opposite directions. We heard from the Bank of England they are planning to redo or get back to that quantitative tightening path as they focus back in on inflation. And it is going to be pretty much on the schedule that we thought, but they're not going to be putting some of those long-end bonds back into the market. They won't do QT at the long end for the time being because of the volatility we've seen at the long end of the curve, and so the market adjusts accordingly. This is the German 2-year yield. I put this in here because on the GMM function, this one stood out as being the more outsized or unusual move in terms of what we're seeing on sovereign debt markets this morning. But it was the 7-year where we saw record low levels of demand actually in Germany, although I should say those records only go back to the middle of 2020. But still, weak demand coming through for that issuance. Concern about, on a European context more broadly, not just in the UK then, whether we're going to see indigestion in bond markets, Kaylee, if we see governments issuing, of course, to shore up the consumer, and also seeing the ECB slowly pivoting towards QT.
Okay, so a lot of questions remaining in the UK bond market for sure, Anna. Let's talk about how that translates to the equity market. Beata Manthe, head of European equity strategy at Citi, is joining us now. Beata, you have 10.1% inflation in the UK. Major questions around the fate of the bond market, the fate of the new government, fiscal policy in general. Why do you favor it here?
Very good question. Indeed, inflation came a little bit above the market expectations, in line with Citi economists' forecast, to be fair. And, you know, what it means is that the Bank of England will continue to hike. So we expect 75 basis points hike at the next meeting at the beginning of November, and further hikes going down the line up to around 4.25 terminal rate. But of course, perhaps it sounds counterintuitive that despite all the chaos that has been happening in the UK bond market recently, actually we continue to favor the UK market. But what you have to remember is that the UK, and I'm talking FTSE 100 here, is really not a play at all on the UK economy. Actually, there is almost no relationship between the direction of the EPS for FTSE 100 and the direction of the GDP for the UK economy. It's the most international market. 70% revenues comes from abroad. Plus, the most obvious transmission mechanism and the most important transmission mechanism is really the weakness in the pound, which is helping these big multinationals. So we continue to. Yes. So this UK is our favorite value market, continues to be.
Okay, I wanted to ask you about that, Beata. Yeah, you have to go down to the smaller caps, don't you, to get a reading on the UK economy. But thinking about the strength of the dollar and what impact that has on your universe, we obviously heard from Netflix overnight, and that plays into this theme that the strength of the dollar does hurt some of the big multinationals in the United States when they bring those foreign currencies back into dollars. And you've talked about how it helps some of the big UK multinationals. Does it help other European businesses, Eurozone businesses, or are other factors just bigger than the assistance they would be getting from the strong dollar?
Well, Anna, dollar strength in the risk-off and shrinking economy is not good for anyone, right? So just about the US equity market can weather it a little bit better. But when as I said, the UK has the biggest share of multinationals and revenue coming from abroad. But actually for the Eurozone, it's around 40-45%, down from the 70% for FTSE 100. So you also have companies that do benefit from the weakness in the euro. And that's something that our Citi equity research analysts are highlighting a lot. And it is at the core of their themes for relative bullishness on some stocks.
Beata, we talk so much about monetary policy that it almost makes you sick. And we don't hear as much about fiscal policy. Do you expect that we're going to see some big moves, especially, big European shared debt?
So that's a very fair point. And of course, everybody is betting on the scale of stimulus that could help to limit the downside, because I don't think anybody at that point doubts that the Eurozone economy or UK economy is going into recession or is already in the recession, right? But what worries our economists is the reaction function of the market to the big fiscal stimulus out of the UK and the U-turn that the government had to do on it. Of course, what it does, it's now limits, it takes the floor from the downside. That means worse contraction in GDP and probably a bit higher inflation in the UK. And some European governments might take notice from the reaction of the market to the stimulus out of the UK. So perhaps we'll get a little bit less out of Germany than previously anticipated. And it remains to be seen what other European governments are going to come out with. It's not yet finalized, but I'm sure they are taking notice of the experience of the UK.
Yeah, being in the UK is like living in a financial petri dish, it feels at the moment, Beata. Let me ask you what's going on with gas prices and whether this could be something that actually turns into a relative to weak expectations, a positive for European corporates, because gas prices, yes, they're really elevated, still over 100 euros per megawatt hour, but they're way down from those highs around 350. Of course, a lot will depend on the weather.
Yeah, well, that would be a very welcomed fact if the gas prices continue to come down, right? But we worry that, we haven't got into the winter yet. There are lots of uncertainties, and our commodity strategists think that there is going to be a huge volatility in the gas prices and also in the energy prices. So I worry we are not out of the woods yet, but definitely that would be very, very welcomed by the market, and of course would limit the upside to inflation and perhaps the reaction function of the central banks in terms of hiking, right?
Yeah, even if longer-term gas strategies are still in question. Beata, thank you very much for joining us. Beata Manthi joining us there from Citi. Coming up on the programme, we will talk cars. Tesla reports after the bell today. More on what to expect from the automakers' results next. This is Bloomberg.
brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, luxury car maker Rolls-Royce has completed the first step towards fulfilling its promise to sell only electric vehicles by 2030. The CEO, Torsten Müller-Ottwes, spoke about the company's EV transformation yesterday on Bloomberg.
It's a prophecy fulfilled. Our founding father, Charles Rolls, said in 1900 that he foresees a great future for electric cars once charging is fixed and is available. And I think now we are here fulfilling his prophecy, and we are very excited. And our clients are, I mean, it's the very first time that you can acquire in the super luxury segment an electric car. So it's the very first. And for that reason, we are also immensely proud that we are the first. Obviously, it's a true Rolls-Royce and an electric Rolls-Royce second, and that was very important for our clients.
Are you going to put batteries in the Cullinan next? What's next for Rolls-Royce in terms of electrification?
Yeah, I mean, I can't talk today about, let's say, obviously all the next steps, but one promise is clear. By end of 2030, Matt, we will be fully electrified. So every future Rolls-Royce we're going to bring into the market, every new one is a fully electrified Rolls-Royce. So we are ceasing building combustion engine cars or the beginning of 2030.
Torsten, let's talk about the profitability that is going to be with you when you make this full move to electrification. You make a lot of money off building traditional ICE engine cars. Your margins have been phenomenal. Are you going to be able to match those margins when you go all electric?
Yes, definitely, because that was always on my mind when we had the plan to go electric. That is not a plan that was born a year ago or whatever. We basically came into it when we experimented for the very first time over 10 years ago with a prototype of an electric Phantom. And the client feedback was always fabulous. It fits to the brand, great. But obviously, we also knew that one day we go completely electric, and for that reason, contribution margins per car are untouched. They are as strong as they have used to be also in the past. For that reason, no worries. Rolls-Royce will stay a profitable, very profitable company.
That was the CEO of Rolls-Royce Motor Cars, Torsten Müller-Ottwes, speaking to me and Guy Johnson. Joining us now is Craig Trudell, Bloomberg's global autos editor. So, Craig, we got the first electric Rolls-Royce, the Spectre, on the Phantom platform. What does this mean for the industry?
I think it's going to be really interesting to see how this one is received. I mean, obviously, we're still a ways off, actually, from deliveries. We're about a year out from this actually going to customers. But, you know, this is, I'll be very interested to see, you know, the weight, the sort of specs of this one, because, you know, it is quite a boat.
6,559 pounds.
That's the spec Matt's focused in on.
I should know better than to wonder what the specs are, because I should have just checked with you, Matt. But you know, this is an absolute boat. You know, it is a car that you know, is going to be, you know, quite an investment. I do think it was interesting what we heard from the company in terms of, you know, their expectations for the returns on this. And it'll be interesting to see if you know, they're able to actually execute. They sort of talk a big game about, you know, expectations being the same for these as their combustion cars. I do think that the early iterations are likely going to be extremely costly, and you're going to have to, naturally try some new things to make such a fundamental change to what you're selling.
And what a risk, right? I mean, to disappoint a
Right.
Rolls-Royce customer would be a giant problem for the brand. Indeed, that car is heavier than the Cullinan, which is their gigantic SUV. Much lighter cars coming out of Tesla, of course, tried and true over the last 10 years. We're going to get earnings after the bell. What do you expect, Craig?
So I think the big question is just going to be about demand. I think, just 3 months ago, we were in the same position where Elon Musk and the CFO, Zachary Kirkhorn, were being asked about this and whether the macro situation was dragging a little bit. I think they sort of, got a little bit, exhausted with that question because they've sort of, answered any questions about that quarter after quarter, going back years now. But then they sort of delivered a bit of a dud just in the last few weeks in terms of their third quarter numbers, and production significantly exceeded deliveries last quarter. And so I think, they're going to be in a similar, seat 3 months later, having to really address that head on. I think, this sort of excuse that they're trying to move away from this end of quarter rush and, kind of smooth deliveries out. I don't know that the street necessarily took that in stride.
Yeah, we've heard that, haven't we? The stock then, year to date, Craig, down 35% or so. And one of the things that has weighed is the link between this company and Twitter and what Elon Musk wants to do with Twitter. Are we looking to get anything further on that today?
I think that's also a topic that may come up. I was surprised that it didn't really factor a whole lot in last quarter's earnings call. But I do think that, the big sort of concerns and overhangs there are twofold. It's, how much of a distraction is this going to be for you, Elon? And two, are you going to have to sell more shares? He's obviously sold quite a bit of his stake already. He's still by far the largest shareholder, but there is a concern that if he has to do some more selling, is that also, going to drag on the stock?
Yeah, absolutely. And also, if you have your chief executive officer making decisions like paying $44 billion for Twitter, what other mistakes could he make? Craig, thanks so much for joining us. Bloomberg's Craig Trudell there talking to us about Rolls-Royce, Tesla, and earnings that are coming out later. We're going to continue on the autos front as well. BMW chairman and chief executive officer Oliver Zipse joins us later today. That's at 12 p.m. New York time, 5 p.m. in London. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards out in London. Let's take a look now what's ahead today on the data docket. U.S. MBA mortgage applications, building permits, housing starts, all coming, as well as the Fed Beige Book. We're going to hear more from the Fed presidents as well, including a Bloomberg interview with Jim Bullard you don't want to miss. As we were talking about before, Tesla reports after the bell. Interesting to see the demand there, Craig was just telling us. And President Biden is expected to announce a plan to release 15 million barrels more of oil from the U.S. emergency reserves. He may consider significantly more this winter. Democrats have been under attack on gasoline prices as midterm elections near, and the question is, will depleting our emergency energy reserves do anything about that? Anna?
Yeah, let's get some analysis on this then. Paul Wallace, Bloomberg Energy and Commodities editor, is with us. And Paul, is it of market relevance or political relevance, do you think, that we're seeing this release announced by the U.S. administration? And perhaps more significant, the flagging that more could come?
Hi, Anna. I think after OPEC Plus's decision earlier this month to cut oil production, that markets and traders did expect the Biden administration to release these 15 million barrels of oil that it's mentioned. And this is the final tranche of that massive 180 million barrel sell down that Biden announced last year. So in and of itself, it's not too important, but I think that because of what OPEC Plus did, this probably just did a little bit to ensure that the White House would sell down this final tranche rather than holding off or perhaps waiting until next year.
We talked yesterday on radio with Scott Levine from Bloomberg Intelligence. He's a senior energy analyst for us here. He said, it's not really the oil supply that's the problem in terms of U.S. pump prices. It's refining capacity. Is there anything the administration can do to boost that?
That certainly is a massive problem, and if you look at the spreads between crude oil and diesel and gasoline, they're absolutely huge, and refiners are making huge, big margins at the moment. In the short term, there is little the U.S. can do. I mean, it can't increase capacity because that takes years. That takes years and years. It can import more products, but the global market itself is very tight. I mean, if you look at product spreads in Asia and Europe, they're also extremely high too. So I think this tightness in the diesel and the gasoline markets is going to persist. There's just simply no obvious solution to getting out of this. If anything, it might tighten further when we see the EU ban seaborne imports of diesel and gasoline from Russia early next year.
Is there anything is this in any way an answer to OPEC's cuts?
From Biden, yes. I think this it is possible they would have held off on this final tranche of SPR releases until later in the year or even next year if OPEC Plus had held steady rather than cutting production. But I think there is a real concern at the White House, within the White House and within the U.S. administration that crude prices are going to go up even further.
Okay, Paul, thanks so much for joining us. Bloomberg's Paul Wallace with the latest on the oil markets. Still to come on Bloomberg TV, we'll get the White House take on oil reserves. We will speak to Amos Hochstein, who is a special presidential coordinator for global infrastructure and energy security. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
What you're going to see dominate over the next couple of months is volatility.
There's still work to be done, I think, before we can say this bear market's over.
Higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year-end.
I think people understand that if you're a longer-term investor, eventually the tide will turn.
There's so much fear out there, and it's been priced in, so I think we get this little bounce.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene on radio, on television. An interesting week, a nuanced week of economic data. And yes, the equity markets, we'll get to that here in a moment. John Ferro is off today at a symposium. Kaylee Line sits in, which is a good and beautiful thing. Futures up 19, Dow futures up 98. I don't know where to start. I got to go big picture, 60,000 feet, Lisa. 10.1% inflation is not 9.9% inflation.
You're talking about the United Kingdom coming in hot yet again, another CPI print. And to me, this is what stands out. Inflation reads keep coming in hotter than expected, which is the reason why Fed officials and other central bankers are getting worried. You can hear it in the rhetoric, and markets are pricing in much more.
And markets are pricing in. We see on the Bloomberg screen today that inflation adjustment here. I don't know where to start. I'll start with the 10-year real yield. Is John doing the 10? Is the real yield on Friday?
The real yield is on Friday. John Ferro is not.
He's not here. He's on sabbatical. On sabbatical. We'll talk about his sabbatical.
Will we?
Yeah, he's giving a paper. He's either Glasgow or Edinburgh giving a paper.
On
I don't
meditation.
know. Yeah, no, it's not. It's on something more than that. 1.64%
more than
on the 10-year real yield, breaking out.
Yeah, and if you look at the absolute nominal yield, it's the highest level going back to 2008, at least in the United States. So we're looking right now at people wondering where that neutral rate will be and how much has to be reset in markets, given that we have a more expensive funding cost for a longer period of time.
And on a Wednesday, Kayla, I'm going to bring this in after talking to Emily Wilkins in Nevada yesterday. The midterms dawn, and it just is about inflation. There's no other way to put it.
We have less than 3 weeks to go, and the economy is number one. And what is the most present, perhaps, to the American people other than gas prices, which is why we see the U.S. administration making its next move, the next tranche on the tapping of the Strategic Petroleum Reserve.
I got to hear from Javier.
They got to do what they can, right? And there's only so much that the Biden administration can do to control the price at the pump.
Yeah, but to your point, Tom, at what point is it an emergency? How do they justify this from a pricing standpoint?
I don't have this. How empty is the salt mine? How empty are we emptying?
The lowest going back to the early 1980s, if you take a look at that,
Okay, over to the equity markets, not the Queen's Gambit, it's Netflix's Gambit. They get a big pop here. I see all the other financial media surging in that. Come on, the thing is cratered, right?
Yeah, we
And
have
then
to
it's
keep in
up today.
mind the levels it's coming off of, but a double-digit move in pre-market trading is nothing to sneeze at, and really the story is just that they are no longer losing subscribers. That's really it. Is it the worst is over? Perhaps, but again, it's not the kind of growth we were seeing from Netflix in years past.
You talked about who's watching Netflix anymore. All the kids are watching Jeffrey Dahmer, which is actually
It's
this
a huge
this
numbers.
drama.
I featured that with
Yeah,
Sweeney yesterday
and
on
honestly,
radio.
I mean, this is what they're all talking about, and I'm thinking to myself, really, you guys are
it's spooky
a show
season
about a serial killer and someone who eats people. I mean, go figure, but that seems to be juicing the numbers right now.
Sweeney's Paul Sweeney with us 9 a.m. on Bloomberg Radio is truly expert at this, and he really thinks the road ahead for the streamers is difficult. Equity markets 3 days in a row, up we go. I walked in, it was red and green, and to start the data check, Lisa, futures up 18, Dow futures up 85 is another good day.
Yeah, and how much is this on the heels of earnings that are better than expected? Of course, the expectations are beaten down completely. I'm looking at dollar strength across the board and the yen. I'm really focused on the yen breaking out to new post-1990 highs as people wonder whether the Bank of Japan is going to intervene. And you also heard overnight, they continued to reiterate their confirmation they are going to keep yield curve control, even as yields climb above that upward band.
We'll do that in the data, Kaylee, very quickly here. Julian Emmanuel, I'm going to mention this a lot, folks, into earnings season. Every day at ISI out with an incredibly sharp memo. And he says, look, we're at a recessionary average PE right now.
Yeah, he points out that earnings are down about 5.3% with the companies we've seen reporting thus far. It's about 50 of them or so in the S&P 500. But what's also notable is that you aren't necessarily seeing the huge downside surprises. The average surprising, according to Julian Emmanuel, 0.8% and 1.1% respectively when it comes to earnings and sales.
We'll go deeper on the data in a moment. Again, futures up 18. The VIX won't move, 30.78. To me, that's critical. The 10-year yield out to new highs, 4.06%, 2-year, 4.47%. I need a brief.
All right, well, let's talk about Fed speak, because I know everyone's just dying for more of it.
Can't wait.
Minneapolis Fed President Neil Kashkari speaking again. St. Louis Fed President James Bullard, he's speaking twice. Chicago Fed President Charlie Evans. The Beige Book comes out at 2 p.m. Tom will be scouring through the Beige Book. Minneapolis Fed President Neil Kashkari yesterday saying that if core inflation does not stop accelerating, there is no reason for the Fed to stop hiking rates beyond 5.5 to 5.75%. Again, this goes to the scope for a higher yield going forward.
Bullard talked twice, and Kashkari talked yesterday and again today?
Correct.
What are these guys are like assistants. They're like senior economists at a Wall Street firm.
Well,
get out there if you're not talking
exactly.
6 days a week.
Right,
well,
repeat yourself.
you know, the more
are you in Denver?
Well, we're also getting a slew of earnings, which arguably may be more important than some of the Fed speak. I'm just suggesting, although maybe not. Procter & Gamble later this morning, and that I actually am most interested in just because it's a read on the consumer. Tesla and IBM after the bell. Netflix shares, just to point to what we're seeing after the earnings, 13.8% gain before the market. Also
Further
looking
this morning.
United Airlines, I know that you're speaking later this morning to the CEO. That popping as well, more than 7% because people are still flying and people still have, you know, budgets to do so, even though they're really expensive. And at 1:15 p.m., Kaylee, this is to your point, President Biden is delivering remarks on additional actions to strengthen any energy security and lower costs. That's the way that he described it. Will he announce a release of the Strategic Petroleum Reserve, but from where? I'm looking at diesel prices. We're focused on gasoline. Diesel continues to surge, and if you look at the stockpiles, they're at some of the lowest levels that we've seen in a very long time going into winter. Tom, to me, this is one of the most concerning issues because this affects everything that we do and everything that we buy.
To me, it's all politics and is drowned in the first Tuesday of November. Joining us now, this is important, as Lisa mentioned, and I guess we could go all yen, but we're not going to do that. Kamaksha Trivedi joins us, head of Global Foreign Exchange, Interest Rates, Emerging Markets at Goldman Sachs. Kamaksha, I really want to talk about my conversation in IMF with the gentleman from Booth School, the former head of the Bank of India, but we're not going to do that today. We're going to talk about the Goldman Sachs dollar call. How do you determine when enough is enough on strong dollar?
Look, I think we are still some way away from that. I think, what are we learning? We're learning even over the last few weeks is that, the U.S. economy still looks somewhat overheated. The unemployment rate is at a historic low. The inflation, core inflation, is at historic high levels. And at the same time, you're seeing already some other central banks in the world starting to slow down the pace of their hikes. You've seen that with the RBA. We're probably going to learn from the Bank of Japan next week that they're still maintaining yield curve control. And you're seeing, struggles on the UK side, and it'll be an important question whether the Bank of England can deliver, hikes that beat market expectations. So, FX is a relative game. The dollar remains, first amongst equals in this,
Right.
and the Fed looks the most unconstrained amongst global central banks.
Let's talk about an absolute game, not just a relative game. And when you talk about rates, increasingly the conversation is around where we'll end up post this disruption that we've seen inflationary-wise. How much do you see the likelihood of 0% interest rates post whatever this is, once we've worked through this cycle, or will we never see those again in our lifetime? And are we going back to a more Steve Ricciuto-like 2% Fed funds rate as sort of the base case?
Look, I think that it may be some time before we get back to low rates. I mean, I think the baseline, I think for many people and for us is going to be, higher rates for longer. Even under the most, optimistic inflation projections, inflation comes down only very slowly. So yes, at some point, some of these underlying pressures, will fade. I think there are some encouraging indications, even in the recent CPI reports, whether it's good prices, some parts of the commodity complex have softened compared to earlier in the summer. And over time, some of those other parts of CPI will fade as well. So I think you will see inflation come down and rates come down as well, but I think it's going to be a pretty slow process.
Well, Kamaksha, finally, let's talk about where rates have stayed down, and that would be in Japan. We have dollar-yen now 149.45. We are very, very close to 150. What's the breaking point for Kuroda and his team if we're talking not just intervention, but potentially abandonment of yield curve control? Will we get there?
We don't expect it imminently. I mean, they have a meeting next week. We think yield curve control, will be maintained, and I think that it's not the level of the currency per se. Even when you take into account their last intervention, what's already become apparent is that the beta of the dollar-yen cross to the real rate differential has come down. They will, that's what they wanted to achieve. So this is not about levels. It is about the speed of the move. We think dollar-yen can move to 150, maybe even beyond that if these policy parameters remain in place.
Come actually quickly here. I've got to go to your PhD work at Oxford on India. We've just had another breakout of India to 84, 83 to the dollar. That seems a crisis. Is it a crisis or is it idiosyncratic urgency in India?
It is not a crisis. I think what is happening here is India, actually the rupee has been one of the better performing currencies across most of Asia versus the dollar. You had significant reserves being used to get that outcome. I think what you're seeing is a recognition that you don't want to keep using reserves. You don't want to draw a line in the sand when there is a broad dollar move. And yeah, we are having a broad dollar move and they're letting the currency to, move alongside that.
Great first brief of the morning. Thank you so much. Kamaksha Trivedi with Goldman Sachs as well. Lisa, I need an auction update. I didn't hear it in the brief. Any auctions today?
No, that's why I didn't do an update. But this is going to be something that people are looking at. Is that enough for you? I told you about the beige book. Why aren't you excited about the beige book?
I have such honor for the late Rich Yamarone of Bloomberg, who did an improved beige book that was vastly superior. I get very little out of it. I don't know. Futures, she's killing me. Futures up 17. Dow futures up 81. The VIX 30.79. Kaylee Lyons is with us. John Farrow is not. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. Now, it happened as officials reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced that he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. And inflation is keeping travelers closer to home in the U.S. New data from Deloitte shows about 31% of Americans surveyed plan to travel between Thanksgiving and mid-January, down from 42% in 2021. Financial concerns are the #1 reason. The number of households that expect the economy to weaken next year, that also rose. Kakaoco CEO Wan Nam-kang has resigned after a nationwide service outage that caused chaos in South Korea. Speaking at a news conference, Nam-kang apologized for the disruption to the country's top messaging and social media service, saying it will take a long time to recover people's trust. The outage has led lawmakers to consider increasing government oversight of the company. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer like Marriott's Leni Oberg,
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's,
We have to let go of the traditional legacy department store.
and Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Everybody's looking at the UK and say, please, 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 can you get the messaging right to us? We are all confused. Because you know what we need for the currency and what we need for the market is for the volatility to go away, for everything to calm down, and to put this kind of period of massive uncertainty behind us.
Kit Juke, Satya in there yesterday, really quite good on the total picture of foreign exchanges. We just heard from Dr. Trivedi over at Goldman Sachs. That's part of a data check today. Dollar, I'm going to call it fractionally stronger. We're going to do Britain here in a moment, 112.70, slightly weaker, but we've really got to focus on what we see in yen. We are on an intervention watch. There's no polite way to put it. 149.47 is ever weaker Japanese yen this morning. Oil, $84 on American oil. Brent crude up to $91, a little bit of a lift there. And of course, we're looking at the shifts and dynamics of the yield market. The spread, negative 42 basis points with futures up 16. I love Jeremy Warner today. Lisa Bramowitz in the Telegraph. He echoes Churchill. His trust goes to PMQs. And I guess that's what we're going to see in PMQs today, to paraphrase Winston, the blood, toil, sweat, and tears of PMQ. It's going to be something.
It seems as though this has been not only a difficult time for Liz Truss, but a make it or break it moment. And that comes in about 40 minutes. And Bloomberg's Lizzie Burden is perhaps playing music out there in Westminster and beyond. Lizzie Burden joining us now in London. Lizzie, how important are the PMQs coming up in about 40 minutes' time?
Couldn't have put it better myself, Lisa. It is a make or break moment. Apparently Liz Truss has had extra prep this week because, of course, rhetorical flourish is not usually her strong suit. But this week, Keir Starmer, the opposition Labour leader, is likely to focus on austerity 2.0, as he dubs it, because he needs to save another £40 billion to plug the hole in the public finances. He's said that he wants all government departments, bar health and defence, to shave 15% off their budgets. He's not even guaranteeing to protect pensions, and pensioners, of course, a huge constituency, important constituency for the party. But at the other end, we're hearing that he might want to raid bankers' profits, energy companies' profits, so that could potentially make the UK less competitive when Truss wants growth, growth, growth.
Kaylee Lyons with us this morning. Kaylee, what I find interesting, this is not a Brexit analogy. All the analogies are back to 1976.
Right. This is a very difficult moment for reasons aside from just politics. There's a huge economic question here, Lizzie, because of course you still have the energy cost burden, the cost of living crisis. That is evidenced by the fact that you had 10.1% inflation in the UK in the data we saw come out just this morning. How does that put additional pressure on the fiscal side with Liz Truss? Not just that, though, with the Bank of England.
Well, I was speaking to the Foreign Secretary, James Cleverly, earlier. He was floating around in Westminster. He did say that inflation, this figure is concerning because, yes, we are into double digits, which makes it even more worrying that Jeremy Hunt is not guaranteeing that he'll protect pensions. In terms of pressure on the Bank of England, it was already a debate between 75 and 100 basis points. But investors had pared back their bets from 100 when Kwarteng was replaced with Hunt, and this is only a slight beat on economists' expectations, so perhaps it doesn't really move the dial. But the other interesting thing is that the Bank of England has said it's going to go ahead with quantitative tightening the day after the Halloween budget, except at the long end of the curve. So the BOE really showing that it wants to fight inflation. It won't be beholden to the government, but it will keep an eye on financial stability. Confident foot forward from Andrew Bailey.
So, Lizzie, is it safe to say that the BOE has been able to reclaim credibility?
I think that Andrew Bailey is getting more plaudits for his handling of this than perhaps he was when he forgot how much he earned, or he was making controversial comments about whether people should ask for pay rises in a cost of living crisis. He's won the game of chicken with Kwasi Kwarteng, and this seems to be a pretty smart compromise on QT.
Where are we right now when it comes to where they're going to go? Are they going to have to raise quite as much? And if they don't, can they curb inflation that today came in at the hottest pace going back decades, hotter than people expected?
I think it depends partly on how the labour market reacts. That's one of the reasons why you've seen this rise past the double-digit mark. There will be members of the committee who want to go for the 100 basis point hike just to front load and clamp down on inflation expectations. But don't forget, given that Jeremy Hunt is taking away a lot of the sugar rush that Truss had wanted to offer to the British population, the recession risks are heightened. So we're back to this very difficult struggle of not wanting to add to that by hiking too aggressively.
Lizzie Burden, thank you so much. Greatly appreciate it outside Parliament today on a perfect autumnal October day in London. I want to go back to earnings. It's earnings season. We've sort of been doing the econo-babble maybe too much. Procter & Gamble today with a dividend growth of 5%. In my world, that doesn't get it done anymore.
Right. Well, people are looking for that much more because they're not getting it on the risk-adjusted return given where rates are. Just to give you a sense, though, of what perhaps we can expect, Nestle's chief executive officer just put out the biggest increases in price going back decades. And
price of products.
Now, price of products. And now what you're hearing is the CEO saying there's more to come. So this is a real tension here. There has not been a pushback significantly against at least the world's biggest food company when they raise prices. When do consumers say, no mas, we got to stop?
What do you see here, Kaylee?
Well, I just question what that means for the Federal Reserve, because isn't what the Fed wants to see the demand destruction kicking in, the companies not being able to execute that kind of pricing power and pass on higher input costs? They want to see consumers pushing back against that. And if we're not seeing it yet, isn't that problematic?
What don't you get?
I don't get the idea that monetary policy can manage the demand choices of different cohorts, different deciles of the American public. I mean, there's a huge part of America flat on their back.
Right, and
but there's a lot not.
Right, and this is something you were talking about, people sipping champagne and buying luxury goods, and this is sort of the other end of the spectrum. And then if you have food makers that, sure, they're able to pass along price increases that are bigger than they've seen in decades, but where is the marginal dollar not going?
I mean, if they're going to raise the price of my vintage Wella Balsam instant conditioner 1993 24-ounce, I'm still going to buy it.
Do you still use bow tie wax?
No, I don't.
Still a thing?
No, I don't.
Yeah, for a while. You were the one that introduced me to it. Is that expensive?
Yeah, it is. And it's gone up. Like even Tang went up. Tang went up, which was just terrible. It's time now for the Bloomberg Crypto Report. We do this on Wednesdays with Kaylee Lyons, of course, the star of all having to do with what's the nuance of crypto that you learned yesterday?
Honestly, I think what's interesting in crypto right now is it's arguably the least volatile of any asset class, which is the exact opposite of what we've gotten used to. But as we have monetary policy roiling stocks, roiling bonds, crypto has stayed pretty static. It's almost interesting because of how uninteresting it's become.
Are there more losses to come from
It's a good question.
Scandals or non-scandals?
Well, that's always a big question mark when it comes to this space. But we've been in this range in and around 20,000 for months now. And nothing really seems to be a catalyst for a material breakout either way.
I got a huge response from my interview. I think it was in Washington with the head of the CFTC.
Yeah, I watched that one. It's a good one.
Well, 5 people watched it. But what a battle.
There's a huge regulatory question mark and definitely a turf war between Gary Gensler at the SEC and the CFTC.
That covers crypto till the end of the year. Stay tuned. Bloomberg Surveillance. Good morning.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Bloomberg Surveillance. Good morning, everyone. Really thrilled that you're with us today on radio, on television. It's a Wednesday, and it's an odd week. It's still the turmoil we see, 10.1% inflation printed in the UK. But with an equity lift here, futures up 7 right now. They've given back a little bit in the last 10 minutes or so. The yield story, Lisa, help me here. 2-year yield, 4.48%. I'm still not used to it.
Especially because the 10-year yield also rising. Again, this is not just a front end rising, long end declining. You're seeing it now 4.07%, the highest level going back to 2008.